Good morning, traders, and welcome to NinjaTrader Live. Chilly day here in Southwest Florida. I know nobody wants to hear that up north, but it's pretty cold. I got my vest on today. I've got a wonderful crew inside the studio today. We'll start off with our senior economist. We did this yesterday, otherwise known as Shy Girl.
Either or.
Yeah, either or.
Shy Girl.
Or Tracy Shuchart. I mean, I'm just so used to calling her Shy. And then we have the lovely Tanya Trades. Tanya is a content creator and independent trader, and really great job on the stream yesterday, Tanya. Just guiding people through really a choppy day during roll. You just did a fantastic job.
Yeah, it's not an easy morning yesterday. We ended up going to my targets in the afternoon, which is really so typical, but I guess it is for a Monday of rollover.
Yeah, I know. That's what happens. We talked about how roll is so choppy, and it's just difficult to manage. But you did an amazing job keeping everybody even keeled, as you always do. And my boy Jimmy Cagnina, Cags. We got a lot of nicknames in this group.
Jim, good morning.
How you doing, Jim?
Good morning, everybody. Doing good. It's cold here too, Anthony. So I don't feel that bad. It's 45 this morning.
I think we're in the 50s.
It's
I didn't
52.
Even 52 here in Naples, Florida. And of course, Jim is our senior market strategist, and we're going to get to an Edge report today. Jim, that conversation yesterday with Edgeful was really cool. We got a lot of engagement from traders talking about just bringing math into the equation, how Edgeful, it's a tool that we're going to be talking about quite a bit here. We know that it's not just about bringing math into the equation with something like Edgeful that actually gives traders a complete edge. It's really about bringing strategy behind it, and I thought that you guys did a great job of explaining that.
Yeah, and the stats kind of help you, get released from your biases that are incorrect, right? And you make certain assumptions just based on for whatever reason, and then boom, you see the stats and it's the opposite. It's like, all right, I'm not going to do that.
Yeah, no, 100%. I thought that was it's really important to explain people like that. Just because this is a higher probability doesn't mean it's going to work. You have to actually have a strategy that indicates it in that direction. And if anything, I always say, if I could get things to keep me out of more bad trades, even better, right? And I think that those probabilities help me lean more, but one way more than the other. So I thought that was great, and we'll get to more of those later today. This morning, I want to start off with I think is really kind of the lead story. When I look at the markets overnight, kind of muted so far, a little bit of a pullback in equity indexes, not a ton going on today, except in silver and gold. That story continues. Shy, I mean, what are the headlines? Is there a reason why gold and silver are higher? Walk us through that a little bit.
Yeah, absolutely. So we have spot silver actually has gained 17% this year, make it one of the best performing commodities out there, and futures have even done better than spot, which is amazing for that market in particular. But what we're seeing is that we're seeing a lot of the silver moving from London to New York. So that's increasing lease rates. And what that means is rising lease rates pretty much suggests scarcity in physical supply, especially in London, what we're seeing in London right now. So, and when we see these high lease rates, it implies that we have this strong demand for immediate delivery, and that kind of pushing up the spot prices as well. And then the cost of this is that traders who are short during these periods of high lease rates face higher carrying costs and making their short positions even riskier in the market. And so we have that going on. And then we also have the threat of tariffs on Canada and Mexico. And Canada's already said that they are going to impose a 25% tariff on silver. Now, we get 70% of our silver from Canada and Mexico. Canada is about 20%. And so really, when April 2nd comes, this market might not even be positioned well enough to endure these tariffs, and we might get really squeezy.
Yeah, that's interesting because it basically, so you have a macro headline pushing it higher, you've got people positioned wrong in a market, and you've got headline risk as well. Something else I want to talk about, which I think is, I've seen a lot of people tweet about this. Again, this is not my world. That's what we have you here to help clear us up. I mean, guys like Jim and I, we don't get this stuff. I know, I'm sure Tanya knows probably more than Jimmy and I about all the holidays work things too. But I've seen people talk about that you're going to see more people go to like silver and gold instead of U.S. interest rates because of what's happening with tariffs. I mean, is that a story that you've seen talked about more and more?
Yeah, absolutely. And we've seen, we've kind of we have interest rates really haven't done it much all year, right? We've kind of been kind of a sideways market. But we've seen a lot of people pour into safe haven assets, not only on tariff threats over, the last month and a half or so, but now we kind of have these new geopolitical issues. We talked about yesterday, more strikes on Houthis in Yemen. And then this overnight, what happened, the big headline was Israel and the Gaza troop with strikes, blaming Hamas for the breakdown. That was the headline. But really, what we saw immediately happen is we saw some risk off in the indices, particularly in NASDAQ, that's very exposed to risk in growth stocks. So we saw that come off about 0.5%, not a lot, but still came off right after those strikes. That's what we saw in the overnight. And so that's kind of pressuring those indices across the board this morning. And of course, we have gold and silver up, and we also have oil up as well. Now, oil is not directly affected because Gaza doesn't produce any oil, but just the mere tensions in the Middle East and the area. And I think traders are thinking maybe things could escalate, and that could bring a wider range of people in the Middle East into a.
Well, thanks for setting that up for us, because it really helps us understand kind of the macro backdrop coming into a day like today. I mean, it's not super complicated right now. I think it's pretty clear. I think that everybody could kind of understand what kind of environment we are. And thank you for that, Tracy. Is there any economic data that we got today to look at that's going to be important?
So we have not really market moving news, but up at 8:30 we do have building permits, export and import price index, and housing starts.
Okay. All right, well, we'll get to that, and we'll see if it's market moving. I want to talk to these two now about rollover. We'll start with you, Tanya. Yesterday we talked about March. Are you June today?
Yeah, I think I'm rolling over to June today with the volume and open interest being higher in June now. I'll double check again, like once we get closer to the open, but it should be rolled over.
And so does that change anything for you on a technical basis? I mean, because I know yesterday you were looking at, multiple time frames. Because now that once we get into, June, is it all of a sudden like, I know the dailies look different unless you're looking at continuation. Just walk us through that.
So for me, I don't think it's going to be much different, but like just you have to get used to the new numbers on the screen and remember like, okay, yeah, we're still at the same levels basically on the charts, but they're new prices on the charts as well. And yeah, it's not going to be much of a difference. I'll be mindful if there's any gap up or gap down, but I'll definitely be just charting on the June contract as if it was the March, and I'm using the June structure. I'm no longer looking at any like March. If there's a gap on June and there isn't one on March, I'll be using the June structure.
Do you ever look for a scenario, because today you could see like we're trading 57, 13, 14, that like we try to go back to where we were in those other prices. So obviously we're higher in June than we were in March. Do you look at that as like, well, hey, we kind of want to go back to where we were in March? Does that any sort of a driver of your thoughts?
That's typically not really part of my strategy. I know some people might be doing that. I like to, again, I think it's going to be important today to really let it open. I think the first 15 minutes could be a little bit erratic also, as more people are finishing up the rollover. It could go back to the price, but that won't really be part of my like point of interest, I don't think. I think I'm like mostly just going to look at swing highs and swing lows, unless there's an obvious volume gap or a fair value gap where there was from yesterday. But other than that, not really much.
Okay, cool. Well, of course, we're going to be getting to your stuff at 9 o'clock, so we've got time to see where we're going to be at that point. Jimmy, I want to go to you. Rollover March to June. is there anything different in what you're looking at?
Well, yes and no. I mean, the June contract in my mind now is the front month. We have about 20,000 more contracts traded already this morning, and I think that ratio is going to flip big time today. But there's still about a 60 handle separation between the March and the June prices. And we saw this last rollover where it's already Tuesday. So it's a big gap still. And how that matters to me is when I look at the gamma levels, the gamma exposure levels from Q on the chart, you could see some different levels still on the March and June contract. Remember, the March isn't expiring yet. So I kind of like to look at both of those just to kind of think about where we might end up, because these are two highly correlated things. And we don't have this level of complexity with the SPY as an example, because there's no different contract months.
Yeah, and and we talked about this yesterday too. I mean, we talked about how the session was yesterday. I think you could probably expect some of that to carry over today. I wrote my morning note. I think I'm actually a little bearish this morning. I'm going to get to that when I go to my charts later, but I think we're headed probably to 56.96 in June. But I do think that rallies are going to be narrow, breaks are going to be narrow. I think that we're kind of in a two-way tape. I think that this rollover this week, and plus we didn't even talk about this, 2-day Fed meeting, right? I mean, let's face it, tomorrow's FOMC, you got rollover. I'm sure we'll get to more of that later in the day with Tracy. Is really, I think, we're kind of in this standstill moment as we wait to see what happens tomorrow and we get rid of the rest of the roll. So, Jimmy, in a couple minutes, we've got your Edge report coming up. So I want to go back to Tanya and Tracy just a quick second. And I want you to cover gold and silver today in your Edge report. I want to really kind of dig into the technicals, too. So I'm kind of asking you for a favor here.
We're going to cover that on hot commodities, too, at 11.
Yeah.
So.
We'll get you the coverage, Anthony. We'll get you the coverage, but we're remiss in one thing that we need to do a shout out. We have some great folks at a watch party in Chicago right now. You guys are awesome. Appreciate everything you guys
do.
Hello, NinjaTrader.
Hi, Ninja.
That's a great call out, Jimmy. You know what? It's so funny. We get so into what we're doing here, into the markets, NinjaTrader, the support that we've had. I got to tell everybody, since I have joined the NinjaTrader team, it's the best team in the business. Nobody cares more about the traders than what I've seen at NinjaTrader. It is absolutely incredible. We're so, I'm so proud of the team that we have here and the team in Chicago and really across the entire country. It's amazing the support we've gotten for NinjaTrader Live. So I'm very excited to be broadcasting to all of everybody today. So that great call out, Jimmy. I definitely I can't thank you guys all enough. So a quick minute here just before we get into Jim. Anything else, Shai, that maybe on the news that before Jim gets into his Edge report, any other markets maybe we kind of plug for him to take a peek at today?
So, I do have an interesting piece of news. So we just had a fund place a 20 million barrel bet on Brent hitting $100. Now, we know you doesn't really have to hit $100 for this trade to make money, but it spiked 5 delta call volatility by 7 points. Just at a time where we have a lot of top traders and banks are kind of slashing their oil forecasts. So somebody's got a big bet on the upside.
Wow. Well, Jimmy, now to you in the Edge report.
Yeah, awesome. So, all right, so you called out silver and gold. Let's start with that. Silver right now, I mean, this is a daily chart on the silver. Hopefully you guys can see this okay on the screen. We're blasting off, right? I have a rectangle up here. This kind of represents the October 2024 highs, which in my mind were pretty impressive. We're going there now, man, and we're just blasting off. This is a huge rally. This is a powerful candle today, even after, I don't know, this rally really started on the 11th of March. So it's a pretty strong move up. And if we kind of pivot to a intraday chart, we could look at some of the Menthor Q gamma levels here. And, we've been trading around R2 and JAX4 for a little bit. We just broke up further to the upside. We have their 1-day max up here, which is a great target for the bulls, 34.92 half. And then call resistance at that even number at 35. We shouldn't be surprised that that's there. On the downside, if you're looking for a pullback down, we have JAX2, which is the second largest gamma exposure level, 34.50. So we'll see how that goes. But again, this is a pretty strong move up, and most likely it's going to continue. Pivoting over to gold, I got the April gold contract up. Let's just really quickly look at a daily here. Same kind of story, right? We had a long-term area of what I'm going to call resistance around 29.67 on a continuous chart. Broke on through decisively. A little bit of a doji pause a couple days ago, but boom, then we're off to the races. Just taking a look at the gamma levels again for on the intraday, we're above that 1-day max. So Shai is right. Gold is on the move, up 1.11%. So it's a pretty impressive move up. R3 even is in target. And these pivot numbers, R3, you don't see it a lot. It doesn't hit it a lot. But we're very possibly going to hit it today. JAX1, which is the most important in my mind, gamma levels all the way back down to 30.25. So I don't know, maybe we can get a retracement back down there as well. Also on my radar screen though is the U.S. dollar. We haven't really talked a lot about the U.S. dollar, and I'm going to use if I could find it, I'm going to use the Euro FX as a proxy kind of for this. And look at this chart. Look at this rally in the Euro FX versus the US dollar. The Euro FX futures contracts, hands above over the counter, in my humble opinion. A lot of reasons why. But I mean, we're up 6.2% since this low here on February 28th. And that's a huge move up. And so when I'm thinking about one of the drivers possibly of gold is maybe this inverse relationship. Textbook, it's not always perfect, and sometimes it's not even there, but there's typically a little bit of an inverse relationship with the dollar and gold. And so we're seeing that in gold prices. So that's kind of a surprise to me as well. Shooting over, if we got time still, shooting over to the E-mini S&P. Let's take a peek at that real quick. And just again, I'm looking at the June contract. You can see my volume on the upper left corner of my market analyzer. Got about 20,000 more contracts traded in June. We kind of have a wonky volume profile overnight, real wavy pattern right now. Here we have that JAX2 level, 57.25. Again, this might look a little different if you're looking at the March contract. And then JAX1 right here at 57 even for the bears. And that's going to be consistent. You'll see that same JAX1 level in both contracts at 5,700 since it's a popular strike. It's a big popular strike. So that's the story there. And then let's just shoot over to the 10-year note though. And Shai kind of nailed it when she said, interest rates and treasuries are kind of sleepy. The 10-year note right here, last 13, 14 days, has been kind of range bound. And I kind of use this one as my benchmark for the longer duration of the yield curve. We're looking at like a lot of support. Look at all these attempts to break on down. And actually we're attempting it again right now around 110 in 1830 seconds. We only got as high as a handle higher at 111, 18 half. So it's, again, range bound. Something's going to happen here. We're trading between the 21 and the 80 MA right now, and you can see these lines are pinching together. And when they pinch together, they can go sideways for a long period of time for sure, but eventually something's going to break here. So we'll kind of see if the FOMC folks move the needle at all on this report. So I think that's it. I think we covered a lot of ground here. I'm looking at the screen right now, and I think we're going to be passing it back over to you guys in a second.
Yeah, we're back, Jimmy. So I appreciate you sharing everything. Shai, we've got 10 minutes to data. We talked about it not being super impactful on markets. Just give us a quick run through of what this data is. And I think it's always important to kind of know. I mean, we see these data points. I think most people look at them and kind of pass over them like they, and they don't really know what they are. I mean, they might say housing starts or something, but what does it really mean? Maybe do that.
Yeah, I think that, well, really, you're going to have, especially economic people, looking at building permits and housing starts as a sign of what is the economy doing? Is the economy slowing? Are we seeing less building permits? Are we seeing less housing starts? What does this mean for the housing market? And then thus, what does it mean for the overall broader economy, which then, even though the Fed doesn't necessarily care about that, that's not in their mandate, but you can rest assured that they are looking at the data regardless when it comes to their decisions. And then we have import and export price index, which is, it's kind of a sign of inflation, right? Are we seeing imports tick higher, meaning that it's going to cost the consumer more money, right? In the end, if we're seeing this, are we seeing any kind of tariff wars hit the market yet? Probably we won't see that for another couple months, really, because these were prior to the time, but that's what people would be generally looking at this information.
So as we come into an two-day FOMC meeting, I mean, maybe we'll go to you, Tanya, and then we'll go back to you, Shai, as we wait for the data. I think data's still 7-8 minutes out. I mean, it's rollover week, Tanya. It's two-day FOMC.
Yeah.
I know it's kind of putting you in a tough spot coming out here to Naples and trading, because I know for you, it's likely that you're just taking things down a little bit. I mean, just walk us through the mindset going into a two-day Fed meeting.
Exactly. So basically, if there's an FOMC meeting, FOMC rate announcement on Wednesday. Oh yeah. So when there's a FOMC rate decision announcement on Wednesdays of this week, I'm not really going to be rushing Monday and Tuesday like we saw yesterday. I gave myself basically one shot, one kill, one bullet. That's it. And it didn't work out. That's it. That I stepped away. I saw a couple of other people that I know, a couple of other traders, they also tried longs, just didn't work out. You got to step away at that moment. So then what you want to do is size down if you're not comfortable. And then you also want to take it slow. I mean, I really like to just switch to the 5-minute if I'm unsure of structure. If there's anything that's kind of barcodey on the 1 minute or even the 5, then I always just take a time frame higher. Go to the time frame like the 15. If it's still not clear to you where you think price is going next, then you have to go to the hourly. But other than that, if you don't have a clear drawn liquidity or have a clear sense of what the market's doing, maybe it's because the environment's just not good. It's not you. You don't have to force anything. Maybe it's just it is choppy and there is indecision. People are rolling out of their positions, or people are waiting until the rate announcement, until the Fed meeting is over to really put on more risk, which is what I'm going to do. What are the big guys doing? If they're waiting, I'm going to wait too.
What do you think? I mean, a ton of traders. And what do you think the number one mistake that traders make during these types of weeks is?
I think over trading. Yeah, I think that's basically it. If you're caught in some barcode action and then, you want to keep going, maybe you get stopped out by a wick and it wicks back in your direction, and then you get tempted to re-enter the same trade, but you have to take a moment back from the screen. Essentially, what I do is I literally push myself back from the screen, take my hand off the mouse, and I'm like, okay. Take a moment. You don't get back in. You can be a little bit impulsive to want to get back in the same trade. But if it didn't work out the first time, why do you think it's going to work out the second time? Then it could easily, steamroll into something worse where you're revenge trading the market, right? You're like, oh no, I have to be right because it just manipulated me out. Well, maybe that's just because that's the market condition at the moment, right? It's harder. So I saw, yesterday was pretty much during the morning, we had just inside 15-minute bars. We were inside the first 15-minute range of the day until 11, right? So there's not really much edge for me there if we're not moving. So I just took the rest of the day off. That's it. And then you come the next day, there's always tomorrow. There's always another bus. Basically, trades are like public transportation. You miss one trade, you miss one bus, wait for the next one. That's it. You don't have to chase the bus.
And what do you think is the reason behind them over trading? Is it lack of preparation, lack of discipline? Is it both? Is it just they don't have a real strategy?
No, I don't think it's that they don't have a real strategy. I think that it's just they don't like to lose. They can't handle losing, and they need to be right. And, you know, in trading, you have to be very comfortable losing. Like the best traders I know have, like, we talked about this yesterday, have like a 40% win rate, or you said your best year was when you had like a 36% win rate. That means you're losing most of the time, but that means that you're still, you know, taking the quality trades that are coming to you, right? That doesn't mean now just take whatever looks okay, or like, oh, I think I'll take this one, or that you're forcing your will into the marketplace, right? Like that's the worst thing. The market will always humble you in that moment, right? It doesn't have to do what you think it's going to do. I would say I always like monitor when I'm in a trade, and I like to keep track of how long I'm in the trade for, because I know my average hold time and I know my average stop out time. I'll be stopped out within the first 10 minutes typically, which is good. I like a quick grip of the bandage. But then I'm also monitoring how long is it taking for it to get to my target, and whether the market is following like if it's breaking the next swing high. Let's say I'm bullish, I'm marking out, okay, is it going to break the next swing high with a displacement, or is it still lagging there? If it's not going further, that's okay. Like it doesn't have to do what I think it's going to do. I monitor about, and I found that about like only like 30% of the time the market does exactly what I think it's going to do, like reacting at those swing highs towards my drawn liquidity higher for it to displace and energetically go there with no issue, right? Because typically the market is ranging like 70% of the time, right? So it makes sense that it's going cleanly towards my target only 30% of the time. So that way I'm managing my expectations while I'm in the trade. I think that's probably the biggest part I think I've learned from trading, is managing your expectations on the marketplace. So then if you have these super high expectations of yourself to always be perfect and on point, and for all your trades to work out exactly how you planned it, you're setting yourself up for disappointment. Versus if you have this expectation, which we're doing pre-market, we're setting expectations for the rest of the day. Oh, it might be a little bit more difficult because of rollover. It might be a little bit more difficult because of the FOMC rate announcement coming up. Then if you take a loss, you're kind of like, okay, it kind of makes sense. It's no big deal. Just roll with the punches. So yeah. Hey, that was my little spiel there.
No, it was great because we're coming up on data here, and we'll break for that in a second. But I've written so many tweets about this. I've done podcasts about this. Expectations are what I believe is probably the number one reason why traders fail. It's not that they can't make money, is that they can't make as much money as they want to make. And they're always shooting for these unrealistic goals and expectations before, you see everyone's talking about becoming an elite trader tomorrow. Well, how about maybe you break even for 6 months, maybe, and then from there, maybe you go and you learn how to make a little bit of money and manage your business as a trader. I had to go through all of this myself. It was probably the most difficult thing. It was, breaking even. How do I live my life? And then all of a sudden I make a little bit of money. How do I live my life? How do I balance that? How do I stay in business? How do you exist long enough to become an elite trader, right? Yeah. And along the way, there's just so many things to be learned. Everyone's trying to jump that and get ahead of it. I think, are we getting close to data here?
Yeah, it's 8:29.
Yeah.
And 30 seconds.
So about 30 seconds. We'll see if it's market moving. Again, muted session. Following the breaking news is we'll go to Tracy right as it happens. Farm and my boy Farm is going to be back. We're going to do charting, and I'm going to talk about why I'm bearish and why I think we're going to 56.96.
We did, yesterday, we completed a 38.2% retrace from high.
Oh, did we already?
Yep.
Yeah. And so maybe we'll oh yeah, you could see, I was looking at a chart a little earlier with the fib on. I don't have it on this one, but.
All right, we have data in. Building permits, 1.456 million versus 1.450 million, in line. We have housing starts. Actually, we're higher, 1.501 million versus 1.380 million expected. So housing looks good. And we have export prices were 0.1%. Forecast was minus 0.2%, and import prices came in at 0.4%. 4%, a little bit hotter than the expected forecast at minus 0.1%. And that is the data for today.
Thank you, Shai. Markets didn't do much. Really kind of muted. Yeah.
I didn't really expect that. It's not really market moving. It's more economist data.
Yeah, you could still see metals continue to kind of push to their highs. All right, I'm going to go to my charts. We'll bring in my brother Farm from the West Coast. Hopefully we come in with him, and we have good audio today, my boy Farm. And so let's take a look at my charts and see how Farm is doing. Farm, how you doing, buddy?
I'm doing well. How about yourself, Deli?
Good. I mean, do you have just like a whole closet just full of Farm D Capital shirts? You got the blue one yesterday, the white one today. What are we looking at tomorrow? What color maybe? Or is it,
probably
was it just
navy,
blue and white?
maybe black, maybe black tomorrow. We'll see.
It's like the uniform. It is. He's got the uniform every day. So you heard us probably talk a little bit about the macro picture today. Not a ton going on. Obviously today, before we get to the charts, or actually we're getting to the charts right now, I'm going to start off today. I moved to June. Are you on June now today, before we get into your stuff?
Yeah, I've got June up. Yeah.
Okay. So even before I get into the charts as well, I just want to say we know that we have rollover. We have two-day FOMC meeting. Are you keeping your trading light this week?
Yeah. I mean, I think this week is a perfect excuse to practice not over trading and take some time off between roll and FOMC. It's just not something that interests me. I'd rather see the full week shape up and see how it plays out. I mean, at least into Thursday before I start taking, meaningful size on things. And plus, we're in this tough spot anyway, right? I mean, there's a lot of trouble above us, but at the same time, it does look like we're trying to rally off these lows. So things can get tricky. So add on top of that, FOMC and roll, and it definitely seems like a time to take it light.
Yeah, and I just hope that we every day here on NinjaTrader Live reiterate to traders, so much of this market is knowing when not to trade and to understand the environments. I think that's so important, right? And then when the environments get good, and maybe this is your environment, right? Then you accelerate. It goes from, I talked about this a little bit yesterday with Tanya, and she's really patient, and then she's impatient when she needs to execute. And that's a mindset that we build over time as traders. And for me, I think it's a little bit right now of an environment I don't love because it's rollover and FOMC. But again, some other people might thrive in this type of environment. So again, we're not dictating what we think is best for you, but it's just about understanding the mindset of knowing that not every day is going to be an easy day. And there's really not many easy days. There's a couple that maybe come across as easy, but for the most part, they're pretty tough. Do I still have sound here? It went quiet on me for a second, but hopefully we do.
I've got you.
All right. Got me. Okay, cool. All right. So let's take a look at my charts. I've got up here my 60-minute. My 60-minute is really, this is the chart I look at that gives me my bias of direction for the day. And when I look at that, I see, I talked about this yesterday, the Bollinger Bands, the Boomer Bollinger Bands. I think I need to, can I get like a trademark on that? The Boomer Bollinger Bands? I like it. When they come in like this and they start to come in on the 60-minute, you see this area right here. This is a 70% line. So basically, if you were to take a fib from this peak to this peak, this tells me as long as we stay below 57.35, we go back to the midpoint of these two Bollinger Bands. So it's a mean reversion look. That's all it is. So I think this morning, as long as we stay below 57.35, I think we're going to trade 56.96. Now, if we get below 56.96 on an hourly bar close, that brings us in at 56.57. And then I think we're just kind of boxed in. So I think the range today on the most upside in the short term would be 57.35. I look to be a seller there, down to 56.96, down to 56.57. That would be as low as I kind of see them today. Obviously, news or anything could take us above it. And then above 57.35, I think we can make a run at yesterday's high, and there could be a squeezy rally up to 57.92. That's like the highest level I see today. So from that perspective, for me, I I mean, that's all I'm looking at. I mean, probably sell the rally morning till I see a test of 56.96, wait for a setup. I mean, that's all I've got for everybody. And then if I don't get it, I don't get it. But I think you want to sell up into the high 20s, low 30s, with stops just above like 38-ish. Give it a little bit of room. And, to me, the risk is maybe, we talked about this yesterday also with Tanya. I think, you're looking at way more than 1-to-1 if you're selling up in the 20s to the 30s, because I don't think you need to give it much. Once I were to see it get above like 57, 38, 39, I would blow out. I'd probably put my stop just above there, or just auto click if it got up there with a stop a little bit wider. I don't have to necessarily always get to my stop. Sometimes I'll bounce out of them before they get there, and then look for 56.96. That's my chart session this morning, Farm. That's what I've got.
Yeah, I like that. I mean, the sellers have done a decent job sort of breaking down yesterday's profile, right? And so, we had that late rip. I mean, that was kind of a massive move that, seemingly came out of nowhere yesterday. And it was given back into the close. And now we've seen that break down just a little bit. Nothing terrible. We're kind of in the meat of yesterday's volume right here, and sort of just ping pong back and forth. If you look at yesterday's IB high, that's the high of the first 60 minutes, call it 57.26. That's going to be a key spot today. We broke through that, obviously, in that late afternoon rally. We've given it back. So there's a low volume node sitting there, both on yesterday's profile and then also on the overnight profile as well. And so we're actually seeing sellers defend that here. We got that Europe session rip to basically 35, your 35 spot, right? And now capping under 26, and seeing this rotation down towards 5,700, which is key. You said 56.96. Yeah, I think that works. I mean, basically, if you're trapping below 5,700, then all that volume from yesterday is offsides, right? And could then puke through yesterday's open. And so that's kind of what I'm looking for as well. I think right now we're in just a consolidation mode, wait and see until open. And this first move is definitely going to be important. So, to me, if they can, pop over 26 ish, then make a run for that 35. And, I tend to agree if they can rip through those 35s, that sort of Europe session lower high, then we're probably looking at least at a decent retest of yesterday's high. It's kind of an awkward profile from yesterday, between 35 and yesterday's high. It's pretty thin volume up there, but I'm not really, normally LVNs would be somewhat resistance. I'm not entirely certain that either side really controls that LVN though. So, we'll see.
Talk more about the profile a little bit. I lean on you for this. I mean, I used to look at profile for years. I don't look at it much anymore. When you say it's a little awkward, just dig a little deeper and explain to everybody why you see that.
Yeah, so let me see if I can get a zoom a little bit here, just to sort of drag this. So the reason I find it awkward is that, again, so you've got high volume here, so you've got a clean distribution here, you've got a low volume node here. And what I find awkward about it is the fact that, again, I usually, LVNs are going to be, resistance or support, right? To me, I'm not clear that this is controlled by either side. We kind of rip through this on both sides, right? And so with just brief consolidation into that late day rally. And so I just start to, I don't know, I tend to not assume that this is going to be a strong area that's going to be defended by sellers when I see that. So I want to see, probably longer consolidation before a dump through, sort of like we had down here. I mean, this LVN here should have been strong, and you can see it was on the back test later on yesterday. We had this big volume consolidation and then a clear defined, breakthrough that range. Buyers put their foot down and drove this up into the highs. So to me, this LVN should have been controlled by buyers. It sort of was, defended late into the day. They then gave it back in Asia. You can say, okay, well, it's Asia. They're going to do what Asia does and just kind of mess around. But the fact that they're now defending it again definitely has my attention. Now that Europe and into our open is defending it again is very interesting. It sort of puts this whole range here at risk. I've been expecting bids basically in this 5,700 to 5,705 range. It's now been tagged, and sort of like I think we both talked about. I mean, if you're trapping below all this volume from yesterday, then you're very likely liquidating through the open. And I mean, if we get trapped back below yesterday's open, then we're talking about, just yesterday's overnight range, Sunday night into Monday, and things can get interesting. I just really don't think bulls want to be giving back prior day lows already. I mean, we're a couple days into this rally. I think it puts them at risk. And if you look at the cues, we're sort of back testing a key area from below. And I just really don't think the bulls want to be giving back prior day lows yet.
Yeah, I mean, this is the issue that the bulls are going to have right now is that if we get down to any sort of prior day low and they give up, you wonder what it does to kind of break the resilience that they've had for so long. I mean, you saw the rally on Friday. You saw yesterday. I thought yesterday's action in the morning was like, really choppy. And then all of a sudden you had that, midday kind of burst. And it's like, okay, it provided hope again. The buy the dippers are out there. I think some of them got weeded out probably on this last move. But they come back quickly. And all of a sudden you start giving up lows again, because I think psychologically this market already is probably feeling like we have a good low. And I'm not saying that we don't. I'm just saying that you start giving up prior day lows after a couple day rally, gets a little dicey.
Yeah, we start getting sucked back into we talked yesterday about, looking for that clean break from last week's volume. We did that. And we don't want to give that back, because that's just going to look, it's going to look an awful lot like a lower high if we give back that volume. So I agree. Bulls need to step in here into the open, drive this through, 26, and try to lift those 35s. And what's gonna get them there at this point? So we'll see. We always reassess at the open, right? I assess Asia session, I assess Europe session, and then we look and see if cash participants feel differently. So we'll see what that opening drive looks like, and I'll probably let it settle for a bit. Again, it's just a awkward week with FOMC and contract roll, so I'll probably give it the IB, which I do a lot of days, again, the first 60 minutes, and get the profile starting to develop for the day, and then see if I can pick off a trade at a good location. So I think, if you could come down here and, maybe get a trap off sides down here below this overnight low, reclaim, something like that might work today based on yesterday's profile and the overnight profile. And on that topic of the overnight low, that was something that we saw back at the highs. And you may recall I posted that on X. It was Thursday, I believe it was, after the high. It was the first day where sellers came in at the open and they sold the open immediately. They sold through the overnight low immediately. They sold through the prior day low immediately. Like with conviction and volume and no problem. And that to me was like the first signal that like, okay, well, this is high time frame sellers. This isn't just like retail monkeys slamming puts or something, right? Because we had not seen any sort of light volume retail participation that can cause that kind of damage. And so if we go back to that and we're giving back overnight lows and we're giving back prior day lows, then I don't know, maybe some of that bullishness is going to go away pretty fast. So I'd like to see it a little bit more up, but we'll see.
Yeah, I think that their resilience is going to be a little bit fragile right now. Also, we talked earlier, just tensions I feel like they're starting to build a little bit. We had some news this weekend. I think Shai talked about Gaza and then the Houthis, and then you've got, so things are still brewing. And with metals at all-time highs, Farm, you and I talked about this. You do look a little bit into the macro. What are your thoughts with metals at highs? Are you taking a look at those charts? Maybe we take a look at them if you want. And I'm also curious if you're looking at what the other indexes are doing right now too, because I know you and I are really staying solely on ES, but there is a bigger story out there right now.
Yeah, there is. I haven't been looking at metals too closely. I know that I should. I just saw the rip and they're up at the highs, and I certainly wasn't about to chase anything. It's definitely a little bit disconcerting to me. But again, given what the dollar is doing, I suppose it's not a huge surprise. I do think there's more to it than that. I definitely am watching the Qs. I traded the Qs yesterday. And I'll probably look at RTY after the end of the week. I'm just going to let it do what it's going to do. The Dow was interesting yesterday and was somewhat strong. And I've got a few boomer holdings, so I mean that was okay to me. But yeah, you mentioned yesterday was choppy, and that was actually. So we all talk about all the amazing trades that we make, right? And that's all we do all the time on our platform. So I'm going to talk about kind of poop in the bed yesterday, because I think that's kind of fun. With the Qs, that's what we saw. Like Qs were a little bit at risk yesterday, I thought, at one point, below like 700s. This was on March, so I guess below 900s. And so it was one of those situations, and you'll know exactly what I'm talking about, where like you show up at the desk, you're like, you just get ready to trade. Like you're ready to trade, and the trade, there's a trade that presents itself to you, and so you take it. It's one of the trades you were considering for the day, but not necessarily like the trade you were considering, but that's what shows up in your lap. And so you take the trade, and maybe it works, maybe it doesn't, but it was one of those where like you're in the trade, it works, and you're just taking profit on it. And then you look over at ES and you're like, oops, that was the long I wanted on ES for like all weekend. And I'm sitting over here busy covering an NQ trade. So it was just, and I just completely whiffed on the ES trade that I had wanted actually all weekend. So I just thought that was funny, and a good example of where patience, I think, makes sense. Because I just had to watch it go, and I was like, and then end up stopping on runners on the Qs, right? Because that ripped too. So I just thought that was kind of funny. But yeah, I look at them all, and just with contract roll, I'm gonna get caught up on charts after the week. So, but definitely the Qs.
I actually want to go back to my charts, guys. So if you guys could take me back to me, I want to look at something and show everybody something on my charts, and then I think we can go maybe back to Farm again to see what he thinks about this. So if we go to my charts, I pulled up the Dow. Now, I don't trade the YM much at all. But what I do look for in the morning when I'm scanning everything is what looks the most like, if everything looks like S&P, and the S&P starts to move in that direction, it's nice to see the support, because I trade more S&P now than I'm trading the other markets, other indexes. And so I like to see if the formation's similar, and I like to see if there's going to be divergence or if we're going to have them working together. And when I look at the Dow this morning, and this is something that is extremely important to me, is that when I look at my technical setup, that my indicators look almost nearly the same. And then that tells me that there's a really strong confirmation that the indexes are going to work in unity. And I really like those types of scenarios for when I'm trading the S&P, because the S&P feels the ebbs and flows of all the other indexes, right? It's a little bit different like than the NASDAQ or the Dow or the Russell, because the S&P just kind of feels all of them, because it's the big boy, it's the leader. Like the NASDAQ can have a divergent day. It could be up 300 because of maybe two stocks or one stock, where the S&P isn't necessarily going to have, a 1% day opposite the rest of the market. So it's really important to see what the other indexes are doing, to see if at least there's some supporting cast. So if you look at the S&P and then you look at the Dow, okay, you go to S&P and you go to Dow. As I flip through them, see how similar they look, Farm? So you almost can't tell the difference when I'm flipping through the chart, right? And so I click one, and then I click to the next. They look so similar. And so what I like about that is that if the Dow starts getting towards its target, or it starts moving and the S&P is moving in unison with it, to me, they've grabbed onto each other, and the S&P uses that, and I feel like the machines end up taking it to my target. It's just something I wanted to show everybody and show you, because it's like when I see that, it's massively helpful for me. If I go to right now, you go back to like talking about how Russell maybe is not what you're looking for. Like I look at the Russell chart, doesn't look the same on the Bollinger Bands. NASDAQ, really not much either. They may be similar in their formations, but ultimately the indicators look different. And I think I like to see them when they look the same like this, like S&P and Dow again. So I don't know. We can go back to your charts if you want, maybe show the Dow. I know we've got a little bit of time left, but I just wanted to show that to everybody just to give that clarity of what I look at when I'm trading S&P.
Yeah, absolutely. Dow. So I look at the RTY sort of as a gauge for, maybe risk appetite or just kind of whether the market is in a good mood or not, really. Because if they're buying the Russell, which is, obviously going to zero, it's just a basket of turds, then they must be really, in a good mood and ready to buy if they're buying the Russell. I'm kind of joking, but like 10%. But yeah, definitely watching the YM, right? You've got a decent overlap with ES there, and then of course NQ is just so heavy right now, and we've seen, gosh, it seemed like all last year, right? It was the Bag 7 was running, and the Qs were running, and the Dow didn't have any love, and we finally started to see some decent rotations at some point last year. And so it became a little bit more important, right, to monitor all of those and look for when they are aligned, because otherwise you were just trading NQ for so long. Seemingly, it seemed like with the AI mania. So here's the Dow. Anyways,
okay, you got it. Good.
Yeah, I've got the Dow up here. And so this is weekly profiles again. So this is the early week, so far developing profile here. And so, I was actually glad to see that we sort of broke away from this volume from the prior week. And this is going to be your trouble spot, is you've got your trailing week back here, all this volume. These guys are trapped, right? There's not a whole lot of volume up here. But now here's, an LVN that's sitting below all of this trailing week trapped volume. So this to me gets interesting. You've got single prints in here as well. That's just basically a 30-minute period where, price only trades through that range or that tick for one 30-minute period of the day. So you've got an aggressive move out of an area of consolidation. So this is something to me where I expect sellers to control this LVN here, and you've got a swing low right here. So to me, all eyes on this. And then what happens from there is obviously going to be key, right? Because if it's defended and then we just kind of come back here and make a higher low, then okay, no big deal. But if this ends up strong because all this inventory starts puking their brains out and we get sucked back in to range, start cracking prior day lows, then things get a little bit more interesting for the Dow anyways.
Got it. And so we only have a little bit of time left with you. I mentioned something earlier that I'd like to talk about again, and it's off the charts, but it comes down to execution, because you and I both know the execution is key. Today when we're looking at both of our areas, I think both of us talked about, like we looked at Tanya talked about this a lot yesterday actually as well. We were talking about her and how she looks for that little bit of liquidity above an area and then for it to come back in. This morning with that high right around 35, it's why I give the stop a little bit of room, and like I'll manually click out. Like if they're just burying through it, like sometimes I like to see them take that high out and then come back into the range. That's why I'm trying to sell close to that area. So in case I get like blasted out and then it gets back below it, I can get back in. I give myself another option. But I also see if it blows through it and my stop's a little wider, I'm kind of like, I might sometimes just manually click out, wait for it to get back below 35, then re-enter the trade. Because I say to myself, why let it go to my stop if it, I'm happy to do it again if it starts to clear up. I just want you to talk about that and how that works for you in your execution.
Yeah, for me, when I see something, let's say price is sort of approaching that swing high, I start to get a little bit skeptical, and sometimes I'll wait and maybe I'll miss a trade because I'm like, they're going to run that high, aren't they? Right? Because everybody's going to place an order and they're going to sell near that. And so I actually start looking for that sweep. And so if I'm feeling a little bit frisky and I'm, a little bit overactive for that day, which isn't good, maybe I'll jump in if I see, some sellers defend early. But like when it gets close to that, I start to look for it to get swept. And then like you said, then I'm going to hop in on the backside because now I've got a pretty good high to work against. Hopefully, if I see what I'm looking to see there. So yeah, anytime you see people that, it's like people shorting all-time highs, right? They're looking for a double top or something. Like I want it taken. We talked about the CPI wick yesterday. I want that taken first. Like I'm not going to short within a handle or two of some wick that's just begging to get run. And so I do like to wait, and sometimes I'll miss trades, right? Because sometimes sellers will just come in and they'll hit it, and I'll just look for a chance to join if I want to. But I like to see that run. It gives me a really good area to work against, comes back in like you said, and then I'll go ahead and hit it.
Yeah, because to me that's not over trading, right? That's just becoming a better executor of your strategy and understanding that, right? And I think a lot of people, they'll end up over trading an area just because they're looking for a result too quickly. This is more about just letting the trade happen and taking what it's giving us and not giving it too much when it's not giving us something.
Yeah, I agree. And, to me, there's a difference between, there's an area of interest and, everybody's got levels, whether you're a support and resistance trader, volume profile trader, what have you, and everybody's levels are amazing and they always hit. But, coming into the day, it doesn't really mean a whole lot until you actually see, the action. And so for order flow traders, they want to see the order flow that they're looking for to execute that order. For me, I don't actually monitor the DOM, but I see things in the action that suggests what's happening with the order flow. And so I am looking for something specific. So there's those days where it's like, here's my area of interest. It's a good area to execute. I'm going to take a shot. And to me, that's one kind of a trade. And that's fine. Then there's another kind of trade where you see something in the action and you take a shot because of that. And to me, when the magic happens is when you have an area of interest, you want to execute there, and you see what you want to see in the action or the order flow, what have you. Those are the ones to take your big shots at for me. So I'll miss trades all day long. I don't care. I got used to it. For so long, I was working while trading, and so I just got used to missing so many juicy trades. And so for me, I'll mess around with small size, if there's an area of interest or if, maybe I feel like I have a good read on a situation. But to me, I'm saving my capital and size for when I see an area of interest that I want to execute at, and then I see exactly what I want to see at that area. And that's when I sort of slam in the size. So.
All right, Farm. I hear you, my brother. Well, this was great today. I look forward to seeing you tomorrow in the Navy shirt and maybe the red shirt the next day. And then, we'll do this again every week. No, this was great, man. Love your work. Everybody, make sure you're following Farm on Twitter and check out his Substack. Until tomorrow, my brother. I'll see you soon.
All right, we'll see you. Take care, Deli.
All right, everyone. We're going to take a few-minute break, and we'll be back with Tanya and then Merritt.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Welcome back, everybody. Hello, NinjaTrader. I bet you everybody's getting into the office now in Chicago. Great to have you guys tuning in today. Here we are in cool Southwest Florida. We've got Tanya Trades here ready to do her 9 to 9:15 segment, which we really love. But before we do that, I've been getting word that we got a big Tanya army out there watching today. I think we need to get at least... How many likes do you think we're going to need to get before we start today, Tanya?
I don't know. Get it to like 120 likes or 150 likes. I don't know.
You know what?
How many likes are there right now?
I think that we were on mute.
Hit the like button.
I think so. I think I wasn't hot. Well, welcome back, everybody. Anthony Crudele here, and hopefully we are live right now. I hit the mute button by accident. That's 100% my fault. We are in the house with Tanya, and once again, NinjaTrader. Everybody at home, thank you so much for tuning in today. We're so excited to have everybody tuning in from back home in Chicago. We've got our girl Tanya Trades here. We hear that there's a Tanya army out there getting ready for Tanya's segment. But I think we need to get 50 likes on there, Tanya, before we get everyone ready to go here. And I don't even know I need to see that.
Gotta hit the refresh button. Hit the like button, you guys. Yeah, it's cold here. It's like 50 degrees. Good thing I brought my sweater, honestly. I didn't think I'd be needing it, but I thought it might be colder in the studio. But it's like 53 degrees here in Southwest Florida. My first time here, actually.
I know.
And there we go.
Did we get them?
Yeah, I think so.
I think we got them. All right, everybody. Thank you so
Anyway.
much for doing that. Tanya, we had a great discussion this morning. We talked a little macro. We talked a little gold, a little silver, a little bit what you've been doing in Naples. Talk to us about what you're seeing on the charts heading into today's action.
Great. So first I'm pulled up on the daily, and I like to just look at the ATR, so I have that up, of the last 5 days on ES and NQ. So I'm noting, by the way, we've increased the range so much in March and end of February. You can see how this chart just goes just to the upside. So this takes the average range, daily range of the last 5 days, and right now we're at 122 points on ES and 523 on NQ. So I'm already managing my expectations, thinking today's a day before the Fed meeting, right? So I'm actually anticipating probably a smaller than average range than this. So I'm going to also minimize that, and then I'm going to go into measuring out how much did we already move this morning. So if NQ has had the average of 523. We already moved about 200 points. That's not too big compared to, that average range. So we could have a little bit more movement. If we do 400 points today, it'll still be less than average, right? So what I'm going to do here is look at how we're literally still inside yesterday's daily range on both ES and NQ. I think that we could potentially still have an inside day. So that is a harder session ahead because we didn't take out a high, yesterday's high or low. So it's hard to look for continuations or reversals in that matter. So let's look down into the daily. I also have these volume imbalances marked out here. I don't think we would get there today, but maybe on Wednesday afternoon if we continue bullish. So let's go down to the 4-hour. Oh, also I noted here on the weekly that daily volume imbalance is actually part of this weekly volume imbalance, and that's probably from rollover, like we talked about earlier. It might be a little bit different on the March contract, but I will mark that out anyway. So now we can go to the 4-hour. And yeah, we talked about how ES and NQ have that divergence there, where ES took that daily low and NQ didn't. And we did have, I said my draw on liquidity was at CPI data highs for both. We honestly did not get there cleanly. Like we see here, ES paused right before it during this 4-hour and then retraced quite a bit. I am going to note this FEG here. On the 4-hour, we could potentially reach back into here. That would be taking out like yesterday's 2 p.m. lows. I would look for the reactions there. If we just invert this, if we completely close below this, then we can go for this low. If it like bounces here nicely, if it wicks it though, then I would look for more upside. I would look for the swing high to get taken out next, and then potentially up to here. And this is like going into the rest of the week, really. But this is the 4-hour chart. But that being said, like we could potentially draw lower into here first. Okay, and then on NQ, we actually don't have that same gap there, which is interesting, right? And look here on ES and here on NQ. It's completely rebalanced already. And we are reaching back into like about midpoint of that wick. So on NQ, it's a bit more difficult. I mean, we could just run out some trend line liquidity before going higher. And that's my least favorite thing to do, honestly, to trade when it's like a trend line liquidity. You don't know really where it's going to pause and then go up higher. It could also just, go for yesterday's low and then come back into the range. So today I'm really focusing on taking quality setups, not going to rush it, especially it's the day before the Fed meeting. Maybe I'd go back to the 5-minute and execute on the 5 instead of the 1. We'll have to see how that goes, but that's how it is so far on the 4-hour. Now I'm going to go down to the hourly. We have what I can see for the bears, right, is that we have this jagged high now that took out CPI high. We now inverted this FEG on the hourly on NQ and closed below it. And now we made a lower high, right? So this is an intermediate term high. This should not get broken if we're bearish. And then it could potentially go for these lows. So that's a point of interest I'm going to mark out here. We could potentially draw there during pre-market. I could see that potentially happening, especially on the hourly. That's relative to where ES could draw into on that 4-hour chart.
What's that price in ES that you're talking to right there? I can't see it on my screen. Into that zone, yeah.
It's 5690s. Yeah, the 5690 area.
I like that
That's a
area,
good
Tanya.
point.
I think that's where it's headed. Yeah. Today.
Right?
Yeah.
I think you mentioned it earlier, so that's cool.
Yeah.
Okay, yeah. So it looks pretty. It looks quite good. I think right just now in the last 15 minutes we started dropping a bit here. Yeah, we closed below this low. Honestly, the 15-minute does not look too bad for bearishness to go towards there on ES. Because look, we created this jagged high, then we completely inverted it, created a lower high. And again, we're respecting this bearish structure at the moment. We drew into about 50% of this leg lower, and rejected again. Now we're creating probably in the next 15 minutes. We'll see if this ends up being a gap also, and it could potentially reject here to go lower again on ES. And then on NQ, pretty similar. They have pretty similar structures now, which is pretty nice, actually. Yeah, let's see, is ES or NQ stronger? They're around the same. But let's see, same thing on NQ. We came up into this FEG here, rejected it. We inverted this. This is where, where I always look at inversions is if we take a swing high and we created an FEG there, if that gets inverted, then you could potentially have this shift back, shift in the market structure back lower. And that's what it's been pretty much following this. Let's go to the 5 real quick. But yeah, I think potentially draws lower during the first half of the session. It's looking bearish. But like I said, even with yesterday, you can have the draw on liquidity, right? Like I said, I wanted those CPI highs on ES. It could still be a difficult structure in a difficult market, what I call high resistance liquidity run conditions. That's an ICT concept, but just basically saying that, short-term highs that are created might not get respected if it's bearish. It might come back and take that high again. Like we saw yesterday, NQ. I think we took that low of the day, and then we took the low of the day again before going higher. So even though like you could have the right draw on liquidity, it could also just not work out. You could have a losing trade. It's just about managing your trade, as well as you could also sometimes be wrong and still make money, which is the best. That's the best thing about trading, right?
It really is.
So yeah, it looks quite bearish here, and even on the 5. So I'm kind of just watching out for that. I would put out a fib here as well. This is the structure. Now this broke this low. So it could draw a little bit higher back into this area before rejecting again, because that's just a 5. But on the 15, we'll see how that goes. I would probably mark out this order block here.
Explain why you do that. And I just want you to quickly, I know we've got a big audience coming in, and some people may not know what an FEG is.
Yeah.
If you could just quickly kind of go over
worries.
that and that fib.
Yeah, so I draw the fib basically from the swing high to the swing low that breaks a level or a structural level. So from the 5, it would be from this, because this is the start of the move lower, and that's a swing high, and then to that swing low. And then I just look for, typically I do that because I like to think about whether or not that would be shorting. Now this would be shorting at a discount. I prefer to short above the premium, because then I know, okay, even if it goes back to the swing low, that's at least a 1R, right? If it retraces to 50%. But it's just me keeping in mind, like, okay, this might be an FEG, which is, by the way, you asked me to explain that, I will. It's just taking, you see this little gap here from this candle low to this candle high.
Exactly.
There's this gap there. And then I like to think of that, especially if it's, like I said, around 50% or above it for bearishness. I think of that as an order pairing zone where it could, since we displaced through that level quickly, when we retrace there, that could be an area where I would like to potentially short for more continuation lower if I have a confident drawn liquidity there. So yeah, but since this one is below 50%, I don't really like that one too much, especially before the open. So I think we could potentially, retrace a little bit higher up into into this series of up close candles, and then I'd mark out those levels above 50% instead. But so far we'll see we're kind of lagging there. I like to wait for the open. Some people just like to short or get in right away. But like I said, it's the day before FOMC. We could have some more manipulation. There's people rolling over. So I'm going to definitely take my time this morning in getting into anything, and also probably going to size a little bit lower because there's still the rest of the week and after the rate announcement. But yeah.
No,
That's my analysis.
I appreciate you sharing that, and it's very clear. I mean, I understand because I've been following you, and I understood what the FEG is, and now I understand more now why you're doing that fib. That makes total sense to me. It's just you're trying to just get a better entry. I mean, you're using it to,
it really helps me. I mean, even just with a 50% level, it really helps me not chase price. Like sometimes I would like really get in at a discount or when I'm shorting, and then I'd be in drawdown for a long time. But I've noticed if I just draw the 50% level and I get in around there, and I'm right, then typically we're not hanging around there too long. Yeah.
Yeah, no, and because I think visually, if anything, it helps you because if you see you're below the 50%, you're saying to yourself, well, maybe I just hold off here, right? And so that was great. No, I look forward to these morning conversations with you. You're again patient, concise, love it. And it's interesting. All of us yesterday were a little bullish. Today, are you a little bearish? Just to confirm that, or you're kind of looking at a two-way tape?
Yeah, I'm looking at it is a bit bearish in this morning, but also it might be a two-way tape. I'm keeping in mind we might just have an inside day.
Yeah, exactly. All right, Tanya. Enjoy the rest of the day in Naples. Are you going to be streaming later too?
Yeah, I'm going to stream the New York Open now.
All right, cool.
I'm going to head back. Good luck, everybody.
All right, Tanya, thank you so much for joining us. Next up, we're going to have my brother, Meritt Black. What a great guy Merritt is. Apteros Trading, can't say enough about him. I've gotten a chance to know him more and more over the years. Just a fantastic guy and a fantastic trader. I mean, we've had a lot of great conversations. I'm so excited to introduce him onto the NinjaTrader network. And I think that I really do think he's one of the best people out there that helps traders that I have seen. Similar to everybody that we have here in the sense that it's clear, it's concise, you can understand it, you can take it in, and it becomes actionable once you learn it. You need to get a tan though, bro. You're look how much tanner I am than you.
Living that Florida lifestyle. We're coming out of the doldrums here in Tennessee, but things are looking up. Mid-70s today.
Oh man, listen, it's great to have you here. It's all I could say.
Thanks, brother.
I'm super excited about it. And first time on the NinjaTrader network. Not the first time you and I have spoken on live, on streaming. I think, as we kind of lead off this with you today, tell us just a little bit about yourself, just a quick backdrop so people that are new to you understand, Meritt Black and Apteros Trading.
Yeah, and I am in a position here, so I am a little focused on that and whatnot, but we'll multitask.
What's the position?
I'm short in Q. I saw a little stop run potential.
Oh baby.
In this area here, so there was some the juicy part is done, which was just running stops below these lows here, and this is cumulative delta below here. You can see they really kind of accelerated it as we hunted those stops. From here to me, heading into the open here, 11 minutes. I'll get lucky if this thing doesn't stop me out, but it's good risk. It's good risk that I like having on here. You guys are all patient and waiting for perfection, and I'm out here just hunting stops, just grinding, baby. So that's the best intro for me. No, I fell in love with trading as a child. I started studying it at a very young age, an odd, 6th grade kind of deal, and ended up working my way up. Obviously, a ton of failure. Continue to have failure as all traders do. Ended up at S&B Capital in New York with Mike Bellafiore and that crew. Learned a lot about real prop trading, about real high performance, being surrounded by people like that, and ended up starting my own shop in 2020, Apteros Trading. We've got 20-something traders now, so a pretty small crew. But yeah, man, for years I was focused on one market, just trading crude oil for quite a few years, and then S&P for a while. Even the Russell back in the day when it was the TF, I just traded that. And then I kind of found out that multi-market was a really good move for me. I don't know if it's getting old or what it was, but in fact, I know it's not just getting old. A
It's
lot of people
both.
in
It's
our
both.
community, yeah. A lot of people in our community are finding a lot of success with, instead of forcing something on a market that may not be in play or whatnot, going and finding where the best, NADRO, our methodology, um, narrative opportunities are, contextual opportunity, asymmetric risk reward. Where's it at? Let's go there, and then let's deploy our execution tactics and try to catch something. Now, the caveat is that during times like this, there's a lot of opportunity if you have short-term skills, okay? So if you're just kind of a bigger picture position trader, swing trader, then I think continuing to do the multi-market thing, even when we're in a risk-off mode like now, and the VIX is spiking and all these kind of things, I think that it makes sense to stick with what you're doing. However, if you've got some really good short-term skills and you can scalp and whatnot, then man, these conditions in NQ in particular and whatnot right now are pretty good. Pretty good. There for a while, there was a lot of herky-jerky headline risk that was not too much fun. You could kind of get caught on the wrong side of those at times. You can also get lucky on those. People don't really talk about that often, but you can get lucky on headline risk too. And it ultimately, headline risk is a kind of a wash over the career of a trader, I think. But yeah, that's kind of a little bit about me and a little bit about the markets and what I'm doing right now.
Okay, cool. A couple things. First, I want what is the defining difference between Apteros and what we would consider a lot of these evals or prop? Explain that, because I think it's important as people know who you are and what you represent, and what you're doing here at NinjaTrader Live.
Yeah, don't get me started, man.
Be nice.
So many things to say. Yeah. I don't want to throw anybody under the bus, but look, guys, if you can trade, capital is not hard to come by. Okay? If you can trade, you can get the money. Whether you acquire it or whether you use a firm, that's not hard to acquire. Now, this is coming from somebody who, when I was starting out trading, I would fund a tiny account with all the money I had in the world and blow it. And I mean, I had no money. So I understand. In fact, I was a funded trader at Top Step in, I don't know, 2012 or 13 or something, as I was, in a stage where I was figuring things out. So anyways, funding is not hard to come by. Do you know what really is going to make a trader? Do you know what's really going to, what's the key word? What's the key word for a trader to make it? I'm asking you, Crudele. What do you have to acquire? What is the one word that traders are after?
Probably after they lose, it's probably consistency.
Consistency. I knew you'd get it. Consistency. That is
you
what
put
a
me on the
trader is
spot.
after.
Hey, you put me on the
baby.
spot there,
and
man.
you came through as always. I don't like conversations where everybody's just like, "Oh yes, that's great. Oh yes, I'm going to put you on the spot every time we get on this call, baby. Let's go." And I hope you do the same with me.
Yeah.
So, anyways, I'm getting to my point here. You know what's really the big deal for a trader and being able to make it and sustain? It is, and I do not like this buying I'm seeing right here. It's environment. It's a place where you can have oversight and more than just basic risk management. You can have people around you, a team who knows you're trading. getting capital and just being in isolation and just trying to continue to do it from your mom's basement is not going to work. You might have a flash of success for a while. You're not going to make it. You're not going to sustain. I don't care if you make six figures. You're not going to make it. You have to have environment and a team around you and collaboration, and you have to be able to really, really substantially lower your costs. You have to do a lot of things that pro traders in pro trading environments get. And that's what we strive every day to provide at Apteros for traders. No
Great.
games. We
And I
do
know we're
have
gonna-
the sim to funded evaluation type process, but that's because I don't want to look at it, resumes and do interviews to try to decide if some guy or gal is going to make it as a trader. I want them to just show us in sim, show us that they can do it with something small. And with our current tryout that we have, the ATP version we just launched, we give you $10,000 leash. That's live capital. That's not some sim account. That's live capital. We fund it, and it's not trailing at all. If you start with 10,000 bucks with us, that's your risk leash, and you make 10, and you withdraw the 10 that you made, you still have 10 that the firm is risking on you. It doesn't just close the account or whatever. We're backing traders, and I think even 10 is starting small, but showing us in a short period of time on a paper trading account is also small from your end of showing us what you can do. So we got to both build trust in each other, and then our job is to scale you up and provide that environment for you.
I love
4
it.
minutes
Thank you
till
for
the
sharing that.
Yeah,
we got 4 minutes to the open. I think we go to your charts, and I wanted to kind of set the tone. I want everyone to know, as you come on, you're going to be on every Tuesday with us. I want people to understand the backstory, who you are, what you do, because obviously I know it, and just like we do with everybody that comes on here, we want to make sure that people know, who we're bringing on and what they're all about. And you and I will talk more and more about this throughout. So before I kind of drop you off and kind of just let you be the lead on your own trading today, I don't want to be here distracting you. That's part of what we're doing here at NinjaTrader Live, is like bringing guys and girls like yourself in that are trading, doing it, and it's about making money. It's about preparation and all of those things. So just
I watched
quickly
Leo
talk
and
to us
Nick
before the
yesterday
bell rings
afternoon.
today.
That was cool.
Yeah, they're good, man. I gotta tell you, those two together, they're really good, man. I mean,
I took that exact
it's
same
like short
what
you're
that
gonna
Leo
get.
took. Yeah.
Oh, did you?
Yes.
Yeah, they're great guys. Having them on in the afternoon on NinjaTrader Live. If you didn't check that out, I mean, I don't know if it's just Leo and Nick again today. I have to see who it is, but the Order Flow Labs crew every afternoon. But what are we going to look at coming into today? You kind of heard I had a little bit of a short bias. I think we're going to trade 56.96 in S&P. Farm was feeling a little bit too. We're all kind of like a little bearish, but whatever. But that's what we've brought to everybody so far. You're short, so it kind of goes without saying. Walk us through what we're seeing, and then
Man,
after
I
the
could be
bell
short
rings,
and
I'll let
bullish
you
at the
go.
same time.
Yeah, no doubt. We know that. I mean, that's the beauty of this game. We were talking about that with Tanya just a minute ago. So what are we seeing? What led to this? To you being short?
This is a short-term scalp. This was an area where the market was continuing to not. So I'm like I come from a market profile upbringing, at least from the middle point of my 20-year of trading forward, and kind of the concept of excess and what's a good low and what's not. And then combine that with like order flow and what we're seeing on the tape and the contextual environment. So for this particular trade, we continued to press these lows, and we continued to not find any buyers. The delta was really flat. There was just no really people aggressively lifting offers and whatnot. And so it's just a recipe, especially in this environment where the freaking market, it just loves to just run stops back and forth all over the place. So a lot of times lately, I find myself hunting stops in a sense.
Explain
so
that.
that's what this would explain that. So you identify an area
explain
that's
the hunt.
vulnerable. You identify an area that has a lack of excess, a lack of area that's already been wicked through and reversed through and all this kind of stuff. And it continues to touch and be at a spot. Those areas are very vulnerable to have stops run. So I'm going to watch this right here as we open. if we don't drop if we drop these lows and start to reverse back through this new point, I'll start peeling some more of this off. So yeah, that's all this is. And at this point, big picture today, I think this is a horrible spot to potentially be short right now. I think that we're coming into some substantial, just peeled off a third of the position right there. It was some substantial buying. We saw a little passive seller step in and hold it. So anyways, I think that this is a pretty good spot for potential long risk, either at this spot here as we start to kind of test the lower edge. If you look at the profile over here from yesterday, just a volume profile from yesterday's RTH session, this lower edge, what's going to happen at this lower edge? If we start to kind of look below here and fail and hold back up into yesterday's main distribution, that's not a good look for shorts. Again, last week's value area, that bottom right chart down here, this little top of this rectangle here, that's also a supportive area. So that's why I kind of said, look, the meat of this thing was taking the stop run early here. And at this point, it's seeing if we can get a little bit lucky. And so far, we are getting a little bit lucky. I'm now out of 2/3 of the position I came on the air with here. So I'm
Perfect.
favorable in the trade. I'm momentum in my favor. I held through the open. And then as I get scared, I'm not actually scared, but as the market threatens my position with little bursts of buyers coming in, I understand right here, right now, we're in a spot that's vulnerable to a substantial rotation higher. We might be starting to see the beginnings of it here. So it's a spot where when I see that threat, I peel some off. Book those profits.
Beautiful. What I'm going to do is I'm going to hop out. I'm going to let you run the show. Walk through your process, let you get focused on there. I'm going to come back, everybody. We'll be back at the top of the hour at 10 a.m. Eastern, and we'll. There's no data today, but we'll be back with a market update, and I'll check back in on Merritt. But I think it's important that when we have streamers in here like Merritt or traders in here like Merritt that are streaming, important to let them get focused. Talk to you traders out there. So Merritt, I'll be back with you here just in a little bit.
Yeah, pop in anytime, man.
Talk to you soon.
All right.
All right.
All right. Now it's just us. Now we can misbehave. Crudele's gone. All right. So the question I'm trying to kind of decide here, and I'm in a little bit of an odd position here. Normally, you want to have a really clear game plan for what you're doing with kind of a core or a runner or whatever. I'm quite frankly, quite honestly, I don't have much of a plan for this, so I am kind of winging it here on this last single lot. So whatever. I've kind of told you guys through the conversation with Crudele and whatnot was I'm kind of seeing if I get lucky here. I think this market is at support either right here or down lower into 690s. Okay. So I'm kind of pressing for those 690s a little bit here, seeing if I can get lucky. So that would be all the way down here. So that the market could easily get there today. So it's going to depend on what happens at this inflection and if we start to hold back above it. So if you guys want, just to help clarify that, I could add a couple drawings here. So let's just highlight kind of the lower edge of this distribution and value from yesterday's profile. And if that little buying right there would have been a little more flaggy, maybe taking a few more bars to develop, we could have added and really pressed for the breakthrough, because obviously there's going to be stops from low day yesterday, I suppose it is. That was some of the last stops to be ran right there. Do you see this low? So boom. You know, if I was just scalping this thing, I would just flatten out here. You know, I don't know what we made on this. Probably getting close to 7,000 or something. But good lesson here as I say that to myself. I don't really care what the P&L is. You want to stay focused on what's in front of you. You don't want to be looking backwards, upset at something that happened, a mistake you made at the last, you know, you're 0 for 3 in some trades. And you don't want to be looking forward at what you're afraid of. You don't want to be too anticipatory in your line of thinking or reasoning or fake rationale for putting a trade on. You want to be in the moment. I know that's a cliche thing to say, but it's really, really true for traders. You know, I think we need to redo our website or something. I see a question from Steven in there about our scalping course versus the NADRO course. So we need to try to do a better job of messaging the differences between those. In fact, some people think scalping, I know scalping doesn't have a firm definition. Some people think it just means you're scalping for a tick or two. To me, this is a scalp. And I've been in this position since, what, before 8 a.m. So I've been in this position for, let's call it 45 minutes. And to me, this is a scalp. Well, sometimes you get lucky, guys, and that's all this is here. We're on the right side of this. It's not really a skill thing. We just got lucky on what started as a simple stop run, just kind of turning into an opening drive. Question from the chat. Do I have any rules on scaling out? Also notice, guys, I haven't touched my stop. The idea of moving my stop has not even occurred to me. I haven't even considered it. We certainly could do that. You know, where would I not want to be in this position anymore? Well, probably, let's say somewhere, it's kind of tough, but, you know, we'll probably be out of it before there, but somewhere around here. I kind of look at this lower one standard deviation of these VWAP standard deviation bands, and for a trend, quote unquote, to hold. I'm thinking about getting out. Let's see what they're doing. For a trend to hold, I typically look. We're just so extended here. We are so far away that it's just tough to hold risk. Sorry, I'm all over the place here trying to trade and teach and narrate and answer questions at the same time. I'll do my best. So let me just focus on what these buyers and sellers are doing here for a moment, if you don't mind. Yeah, I'm flat. That's a great trade. Really nice work. So let's talk. Now my mental capacity is opened up for you a little bit more here, rather than being totally focused on the market. Scaling out. Yes, I have. Look, let me say something. Most of you that I'm talking to here should not try to trade just like me. So it's great that we can ask questions and we can discuss these things. And I will be transparent. I will tell you what I do and how I do it. But I don't think that most people who are trying to make the turn, as it's called, as a trader, should do a lot of the way that I do. What do I mean by that? I think that newer traders, so I'm just going to consider you guys as newer traders trying to make it. You need to be process driven. You need to have a process that you write out, that you create some really good rules for example, scaling out. You need to be pretty methodical in approaching things that way. I like to use a sport analogy. And I'm not trying to pat myself on the back here. I'm just trying to call it what it is. And there's a difference between a very high level of let's say sports and the beginning. At the beginning, guess what? Your psychology doesn't actually matter that much because you don't have an edge. You don't have a process. You don't know how to hold the tennis racket. You need to go take a tennis lesson. You need to learn how to hold the tennis racket. You need to learn where to stand, where to position your body. You need to learn the rules of the game, right? You don't need to sit down and really get into the nitty-gritty of psychology. Now, mental framework is module 1 of our NADRO course. So am I being a hypocrite with what I'm saying here? No. You can begin to understand the mental side of the game, but it's not the most important thing at the beginning. You need to learn the fundamentals. When I got to SMB, one of the first things we had to do was drill hotkeys. We had to learn our hotkeys. Crudele coming in here, chest pounding. If you want to chest pound, come on the camera and chest pound. Don't chest pound in the chat like that, Crudele. It's embarrassing. Anyways, you learn the fundamentals and then master them. Do a really good job. First, do the simple well, then simply being the best at doing the simple. That's what you need to do as a beginner. So regarding scale outs, which is our topic of conversation, I'm skirting around here. You got to have a process for scaling out. At my level of trading, I'm much more discretionary. I'll allow myself to really kind of flow and do some things that I used to try to do and couldn't make money because I tried to behave that way. I thought I was so smart. I thought I could do these things. I thought I could trade every little movement of the market, and I could not make money. It was only at the point where I said, I have to get more rules based. I have to get more process. I have to get more process driven in my approach that I could start to put up some P&L and keep that P&L. That's the hard part. Now at my level of trading, it's very discretionary. So I have a lot of frameworks. It's the same frameworks I teach in NADRO and scalping course. I'm not here to pitch you guys on NADRO and scalping course, but it's a part of what I do. So it's going to be in conversation. So let me answer the question now with all that context. Context is king, as I like to say. For me, it depends on the type of trade. So if I'm getting into an A+ NADRO narrative trade, I'm going to be less trigger happy scaling out of a position. I'm going to really sit in a bigger portion of the overall trade with a core position, hold more size for bigger moves. I will typically look to scale out on a decent size rotation. So one of the things that we talk about, NADRO is an acronym. The R is for rhythm. Rhythm, it's a similar concept to like average rotation size or the median rotation size of a market for your time frame. I know people will do spreadsheet studies on things like that. I'm not as analytical about it. You could throw up a zigzag indicator with some good rules for it or good parameters and kind of figure out what's the average kind of movement of a market. If I get into a position and it moves about that far, doesn't have to be rocket science, I'll peel some off. And then I typically use something like the DVA framework. Sellers come, whoa, big time. That was a big move. Where was I? Oh, scaling out. One on a kind of a rhythm move. The second would be our DVA, another acronym. The D is for developing value area, which is these standard deviation bands intraday. If we're getting long from a lower extreme and we rotate up to the opposite extreme, it's a good spot to scale out of some more. And then from there, it becomes more context based, more or for example, if we were long over here, I'm looking at the profile chart here. If we were long off the lower edge of yesterday's distribution and we traded all the way across it to maybe this LVN here, that's a good spot to scale out. Good spots to scale out are places where simply if you weren't long, let's say, on some time frames and for some traders, would be at the very place how you would use that exact tool to potentially look for a short. That's how I look at scale outs. There are places where, look, we're kind of getting extended here. We've run out of risk reward on this time frame and then maybe another time frame, multi-time frame. Don't get me started on that. That's some secret sauce. And so that's how I approach scaling in general. When I'm scalping, it's much more, as you guys saw me when I was in that position, what are buyers and sellers doing at every moment? I'm very much aware of, like I said, extended. I'm very much aware of the context. Like I said, we were into kind of a potential support area there, 1960s. And then you saw me scaling out whenever I felt that the position was threatened, whenever buyers kind of started to come in and take control of a bar. After an extension lower in terms of momentum, those are places where I'm peeling out of that position and scaling and taking risk off. But look, guys, it's very, very complex. Trade management, number one, will never be perfect for anybody. Case in point, look at what I did here, right? My old trader self would be angry right now that the market was lower than from where I exited this position, right? I'd be saying, oh, I knew I should have held it. I was even talking about, what's the level? I'm not very good at numbers. Yeah, we actually got there. I think I may have even misquoted that level earlier. So anyways, that was the second level that I was in process of drawing. So let me gather my thoughts here for a moment. Let me think about, I'll think out loud if there are some new opportunities. So we're back into the meat of last week's balance. That's a big deal, right? So let me give you the exact logic and what I was thinking with that initial support area that we blew through. See the upper edge of this, right? Volume distribution where the one standard deviation ended for the week. That's that level that I was cautious about. It's the lower edge of yesterday's distribution. It's the upper edge. So I was actually saying, with Crudele, I was like, this is actually, think about this as a trader, guys, how flexible mentally you need to be. You can rewind these things. Go look at what I said to Crudele. I said, I'm short and I think we could go all the way down to this level. And I think this might be a horrible spot to be short. There are so many multiple things going on different time frames, and ranking and distilling is the term we use in our community to weight some of those things heavier or lighter based on what's going on or whatever. So anyways, it's a very, very simple concept. Let's see if I can annotate here. Yeah. So whenever you have any kind of a distribution and you have, as we call, accepted outside of it, right? So in this case, we did this. We already had touched it once and done that. So that's what this guy is here. So that's kind of done. We also talk about recency in terms of weighting a narrative, how important the narrative is or not. In this case, this narrative of a breakout pullback of last week's value. So in this case, we come roaring back towards it. So it's support, but I was short anyways, wasn't I? Because it's a weaker support than it was initially. So that's a concept we talk about a lot. So now, where are we now? We're just floating around in here, right? This is the distribution where I'm drawing in the example above. It comes from here. It comes from these VWAP bands. And so here we are in kind of no man's land. My edge comes from the edges. That's probably the second best quote of that I've ever come up with. The first one is my process is a better trader than I am. And if you could spend a day thinking about that quote, The very best quote of all time is Ed Seykota. Everyone gets exactly what they want from the markets. That's the deepest trading quote that's ever been said. No one will ever top that one, I don't think. All right, so where are we now? Nothing on the yearly. We're extended, kind of a pattern shift on the quarter. The monthly, we actually have a bullish level, which is this level that I've been kind of my lower target when I was in the short. And then there's really no information on the weekly other than we're very extended to the downside right now. So what about the tape? What about the order flow? Guess what? We did bounce off of this support level that I have. Nobody's buying this thing. This delta is atrocious. Now, as you've been hearing ad nauseum from everyone on the show, it's rollover, it's pre-FOMC. So order flow is not as dependable right now as it typically is. You have a lot of artificial order flow, as we might call it. You have a lot of split volume between, like, we can't see the order flow on the other one. We could go pull it up. Maybe that's an idea. Maybe during rollover, somebody comes up with like what the crypto guys do, which is they put together like a consolidated multi kind of threaded. I can't think right now, but you know what I'm trying to say. You put both deltas from both contracts together and look at a cumulative delta. Could be an idea. Because the stuff that doesn't matter, buying in one and selling in another, is just going to net out, given they were both passive or both aggressive. So yeah, nobody buying this thing. I expect these lows to get pushed here. I would be a lot more bullish this. What's up, Julian? I would be a lot more bullish this market if. Let me look at the quarterly chart. If these lows weren't kind of so near each other, and I know that's a little nitpicky. Maybe I shouldn't feel that way, and I'm potentially even talking myself out of it as I speak here. But I don't like the way. Oh, you know what? I was looking at the wrong sections of lows when I went to that higher time frame. So really, what I was talking about is these two lows. They're really kind of close together. It's not really a good low. What is this? From the 13th. If that was a better low, if we'd really slammed and ran stops, again, there's that concept again of excess versus lack of excess, the same reason why I was in this short from right up here. Now I'm just applying that concept to a higher time frame. If it was a better low, I would be more bullish based on this kind of monthly extreme fade setup, as we call it. Okay, that was interesting. So the buyers, the sellers slammed it through, and they kind of failed to do anything below that low. If I would have been paying more attention right there, that's a little bit of a scalp long from these extreme lows. I would not want to really overstay my welcome in that. I think we are at last week's VPOC. Yep, that's exactly where we reverted to. It's a very common pattern when you're attempting to break away out from a prior. And again, I know there's a global crosshair, so it can be a little confusing. I'm on the bottom right chart. You know, we could, if y'all think we could turn off the global crosshair, but global crosshair is very helpful to me. It helps me see, all right, right here on this chart, where's that on the other charts? And I put the puzzle pieces together a little bit better. Anyways, it's a very common pattern for a market that tries to break out of a balance area, which we did earlier this week, that then fails and reverts. It's my short today You may have thought it as a trending play intraday, a breakdown play, which it was. But on the weekly, it's a mean reversion play. It's just reverting back to the most traded price from last week. So multi-time frame understanding, contextual awareness is huge for traders.
Love what you're doing so far, Merritt. We're going to break here in like a minute and change, and then probably go to Tracy and see if there's any headlines. But love what you're doing so far here.
All right, brother.
Yeah, we sit on the lows again. I like what you talked about with that delta. That's interesting. I mean, because you're 100% right. If one's bought and one sold in the other, you still have a net delta between the two, right? So
as long as they were both passive or both aggressive, right? If one was a limit order and one was a market order, you would actually create a difference in that cumulative delta.
Exactly. Yeah, I'm sure there should be a way relatively easy to do that. I'm gonna have to talk with some of the guys back at Ninja. That
we could whip that up
in that's possible.
45 minutes. Yeah,
I think so. Yeah, we got to talk to Burke about that.
There's probably people in the chat who've already built it as we speak.
You're probably right.
That's what my community is like. They put me to shame, and I love it.
I do. I love that kind of stuff. That's awesome. All right, everyone. We're going to take a quick break here. Give Merritt a minute. We're going to come back to Tracy, a.k.a. Shy Girl, our senior economist, with any market-moving updates back in a few minutes.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Welcome back, traders. I'm Anthony Crudele, joined by our senior economist, Tracy Shuchart. Shy girl. We're gonna do this every time,
Right.
Tracy. It's just gonna be what it is. I mean, some people know you. Everybody should know you. But if I call you Shy girl, then we go, okay, what do we do? But nonetheless, I mean, markets on lows. You're seeing, crypto get beat up a little bit, bonds up a little bit, silver, gold still kind of the story to the upside. Energy's up a touch. Any market moving headlines we should be keeping an eye on?
Really, the big movers today we're seeing in tech right now, obviously, which is bringing down the S&P as well. But NVIDIA, Alphabet, Amazon, Tesla, Palantir. Tesla's down over 5%.
Again.
So is Palantir, which is recently just had a big move up, and so we got a lot of tech stocks making big moves today to the downside. That's bringing weakness, obviously, to the index. We had a pipeline halt due to an incident in Nigeria. They don't say what the incident was, but there's a pipeline down in Nigeria. Really didn't move oil that much. They're not that big of a producer, but for people trading crude oil, they probably want to know that information. And really, that's not a whole lot of market moving news on. We haven't heard from the administration today, really. So been kind of a quiet day.
Yeah, but so text the story. I mean, and I think
Right.
it feeds into it. It almost makes it even a bigger story because there is less market moving news. So I think the fact that all those stocks are getting, clipped right now, it really becomes like a story for the bulls. Can they hold these rallies, right?
Well, and we kind of talked about this morning when we were talking about the Israeli strikes on Gaza. It really is kind of a risk-off scenario for indices and specifically for growth stocks. So that would be the NASDAQ.
Yeah, no doubt. All right, Shai. Thank you so much. We'll see you back later. Hot commodities, everybody. That's going to be with Jim Cagnina later. That's a segment you definitely need to tune into.
Exciting.
All right, let's go back to Merritt. See what he's up to. All right, Merritt.
What's up?
Back with you. We'll get your. Not a lot, man.
Man,
you know what was funny this morning? Go ahead.
What was funny this morning? No, you go ahead.
I forgot now. I lost. I was going to say something. You totally derailed me. Boomer.
Well, speaking of hot commodities, it's unfortunate I had, we're all new to this and everything, and I didn't have some data feeds set up properly. So, man, I wanted to short crude oil. That was my play for today, man. I had the finger on the trigger.
Can we pull up that chart? I want to see what you were looking at for crude oil because, you and I have had this conversation. You and I do.
I don't have the data. That's the issue.
Oh, you don't have the data up. Got it.
Yeah. So I'm sure I pinged some guys that they're going to fix it. But yeah, crude was in a good spot for a NADRO bearish narrative. It's kind of been in this down move here for a while, and then recent days, a week or two, it's kind of drifted higher. It's really in kind of a prime spot to kind of reinitiate the short to kind of go with the trend and whatnot that we've been seeing. And again, how good are those lows? Not very good looking lows for the year in crude.
Yeah. Speaking of lows, market's back on lows. I'd like maybe to go back to your charts. I talked at 56, 57, 58 area. It was something I was going to be looking at. What are you seeing now where are you looking for anything? Is anything kind of catching your eye, or are we just still in wait and see mode since you took that short?
Yeah, don't laugh at me if the market just continues going down in a straight line, but I'm kind of bullish from here. This was that lower level that I've only talked about two levels today, right? The two that I have drawn on the chart. And we've gotten to this lower level, and the sellers have made a couple substantial attempts, one in particular, to push it through there. And now we're seeing the strongest buying that we have seen yet in the pit session. So
and not a
I
surprise
would be
to me because I
most
think
likely,
that 56, 58. Yeah, not to interrupt you, but yeah, that's exactly, I agree. I see the same thing. That's why I was asking you. I'm like, I feel like the lows are getting closer.
Even if we end up making substantial new lows today, that whole concept that I talked about earlier, we reverted to last week's VPOC. It is at kind of a bullish spot on some of my time frames. At the very least, we could see something of a drift higher here. And I have no clue what's going to happen next. That's the beautiful thing and the secret thing I think about trading that a lot of newer traders don't realize. I have no idea what's going to happen next, and I do not care what's going to happen next. If you can get to even that point while you're in a trade, that's where some magic happens. Anyways, I think that at least I'm seeing risk reward skewed to the upside right now. If the sellers continue to dominate this tape as they have, that's not going to happen. So we'll see. And it's not we'll see like worthless.
All right.
Like a lot of people just say we'll see, you know, and there's no plan or action there. I think the market contextually is reverted to a spot where I'd rather look for longs. If order flow doesn't support that or do that, I will not be in those longs. And that's what I really mean.
Perfect. All right. I'll leave it back to you. I'll be watching. We're going to come back in again at the bottom of the hour with an edge report with Jim. And so I'll check back in with you. I've been sitting back, tuning in, listening to you, and this has been great, man.
You've been chest pounding in the chat.
Nice
I've seen
having
you
here.
I've seen
to.
what you've
I
been
mean,
doing.
Look, I can't let you take. I can't let you take all the credit. I mean, God. I mean, you know, got to get me involved a little bit. I got a little FOMO.
No,
all right, man. I love what you're doing. I will be in the chat.
Yes, sir. We'll see you around. But yeah, for
I'll see you
everyone
soon.
else, I think that's back-to-back days of Crudele making some pretty darn good calls. Can we get the timestamp on that chest pound though? I think that was low of day. If you guys haven't learned it already, as soon as you, and myself is the same way, I'll put out a tweet. Oh yeah, you know, awesome. We're up, 300 points in this NASDAQ trade. That'll be a top, at least short term. That'll be a top or a bottom. There's real sentiment that matters there. Okay, so market's in a rip-roaring downtrend here today, but we've come into an area of interest. So in my mind, we've now seen a little bit of a shift on the tape. We saw the most buying that we've seen today, as I mentioned. So now I want to see what the sellers have. That's what I want to see. What do sellers have? Are they weak? Do they come right back in as ferocious as they have been? That's what I'm interested in. Could almost just scalp short here just to go with this continued flow and then pivot if something changes. It's a little challenging, I will say, being on a live stream. It does, if you guys have ever done it before, it does make you second guess a little bit more because you don't want to, there's this don't want to look like an idiot type of thing. So you are a little bit more careful. My trading is typically very free flowing these days when I'm scalping. So I'll probably narrate a few. That's kind of one. I'm not going to do it of those today. Yeah, Martin, I think a couple of well, there's Leo right there. I was gonna address two things that Leo had mentioned recently. One, sorry, just watching the markets here. My brain freezes when the tape starts to pick up. I can't speak. One, rollover or no roll? Excuse me. You got a rollover. There's no question there. Back adjust or non-back adjust. It depends on the tools you're using. I don't think either option, from my experience, provide better levels from a price action perspective. However, if you're using tools like I use, which are continuous measures of value, then there is no argument to be made. There is no question. You have to back adjust. You have to. Because there was no gap in price. You began trading something else, and that should begin from where the last thing that you were trading ended. So that's what back adjustment does. So for people who are using it continuous value measurements or things like that, back adjustment is a is non sequitur. Is that the right? I don't even know if that's the right term. It's a non-issue. It has to be. Whether the general person does it or not, it's tomato for price action stuff. Both provide good support resistance levels that the other one doesn't. There's no clear winner there, in my opinion. And then the topic of hotkeys. Oh man, was it? It was Nick who was uncertain about the value of hotkeys. Put us in a room and then give us a test. Okay, the test is you have to place this order, then cancel it, then change your size to this, then place an order with that size, then change your size to this, then scale out of it in thirds. Give two people, someone with a mouse and someone with hotkeys, and give them that test, and then both people of equal skill level, proficiency with their method of choice, hotkeys will crush the point and click mouse trader. Crush. So if you're trading very short term, like some scalping type stuff, it can be very important. The other thing about hotkeys, for example, if you're paying attention to my eyes glancing around, looking at different pieces of information across my 4 monitors here, I don't have to then get back on my mouse and take my eyeballs and figure out where the mouse. You have to use your eyeballs to use the mouse. You have to take your eyes off of market generated information. You have to find where the mouse is, and then you have to put the mouse where it needs to be, and you have to make sure it stays there. Hotkeys are not going away, guys. As long as you've got the window active and clicked, you're golden, and you can keep your eyes where they need to be to absorb short-term information, and then you can execute flawlessly. That's my 2 cents on those topics. I am currently I think I'm a 5 handicap, Crudele, playing like a 10. Buyers non-existent right here as they try to turn. I was thinking about maybe putting on a long if they kind of broke that and some speed of tape came in, and they just absolutely couldn't do anything. And then boom, you see the sellers slam them. A little bit of buying off that wick lower. I just don't I don't get the sense that the buying in this area is believable, if that makes sense. They just seem like they try something and they just don't have they can't maintain it. They can't control the tape. But again, really tough to trade short-term order flow during rollover, right? Today being day one of official higher volume in June contract. Same thing just happened right there. Buyers tried to turn to give us an upward rotation, and then it was just very short-lived and whatnot. So I'm not seeing anything yet that gets me really interested in putting long risk on. Um, Notice how the price action looks different right now. This is a very important thing to observe, for me at least. Maybe it'll be helpful to some of you as well. The bar to bar overlap. Look at how many bars, this is a 1500 volume chart, are just kind of overlapping greatly with the prior bar, right? As opposed to what we saw early on, we saw this really clean momentum. Here's some overlap, but it's at a turn, clean, clean, clean. Even the choppy areas had some semblance of pauses and moves in between, and we're not seeing that here. So that's just, it's not a place. All right, we're going to press the lows. There it is. It's not a place where you can be as confident in assessing, oh, look, at least the way I enter trades, which is turn point, right? Momentum shift after a counter rotation, as we call it. So this is interesting. Bought 3 there. Look at that, already up 1,000. Wow. We got lucky on the fill there. We didn't get slipped. I banged in with hot keys. I rest my case. Drop the mic. You got to be quicker than that. All right, not getting a continuation. Is probably heading a little lower here for a minute. We'll see. Might scratch it. Need to see it push these current highs here. There we go. Out of a third. I'd love to see us run stops into those 720s, just above that major swing high. We're counter trend here. We're going to be more aggressive with this, scaling out, protecting a position. Essentially not going to take a loss on this at this point because it is an aggressive play. I always teach my students, you can take aggressive plays, but you better understand that it's an aggressive play and you better treat it accordingly. And then you better understand where it's an A plus opportunity that's very different, and you need to treat that differently. So I'm not a fan of moving stops to break even. And that's not what I'm doing here. This is the point of the momentum shift. I don't want to be in this trade anymore if it's anywhere in that area. So given how fast this market it can move and whatnot, looking to take another one off here into the 13 to 30 area. I did move that stop to just protect myself in case there's a knee-jerk reaction. I can't react fast enough. Buyers are stalling here. I'll probably end up having to take a scale. I should take it right now. I'm just going to hang on just a second. If they take it a tick below where they just were, I'm going to take that scale. Yeah, okay. So now we see what sellers have. Now it's okay. Can the sellers rotate it down a little bit here? Do they come stop us out? I don't give a crap. Who cares? Let's see if we get lucky in the trade. Who cares? Really wanted that second scale out to be able to have that bullet for the stop run into 720s. Now I'm left with this stupid one lot here. I sound negative. I'm not. I'm not negative. I'm just. That's kind of how I talk sometimes. I have to be careful. As my wife points out to me. All right, so the sellers had a chance and kind of failed to turn it there. So I'm kind of expecting these 720s. My typical size, a lot bigger than this. All right, we took a nice counter trend play here. We're probably gonna bang out of this thing here. Feeling threatened in the position. Flat. So pretty good stuff here, guys. We got the where's an arrow? I thought there was an arrow. We got the short from here. And we got the long. From there. Just being patient, waiting for spots where it makes sense. What I liked, again, guys, same concept over and over and over and over again. The concept of excess, the concept of stop runs, the concept of flushing, which we got right here. Almost a capitulatory type level of selling. And then they can't sustain it. They reverse it. Boom, I bang in. We get the blip higher. This is a very aggressive counter trend play, so I scaled out very aggressively, as opposed to the first trade, the short from the highs. I had an idea of where that market was headed lower and whatnot. Why did I switch to futures? I was 20 years old, starting a CTA as a junior in, I think a junior in college, and about to have a massive failure in my life. And I was trading Forex. I'd had an internship on an investment grade FX desk for a bank. And I learned about trading FX. I'd been trading stocks before that. And I was like, wow, this is absolutely fantastic. So I switched to that, had some really good success. I think I didn't have a losing month for like 6 months or 8 months or something. I'm ready for the big time. I can start a CTA and I can do this. And you know where this story's going. So anyways, I did have the sense about me at the time to understand that, look, FX is shady, right? You don't want to manage money trading spot FX. You want to go somewhere where there's a regulated clearinghouse and exchange and all this kind of stuff. And so I started trading currency futures. And then all of a sudden I discovered crude oil. I discovered equity indices. And that was it. Never looked back.
Brilliant!
Who was that? Wait, was that the voice of Austin Powers? Can we hear it again?
Brilliant!
It might be. I need to watch one of those movies. Did they age well? Are they still funny? That scene where he was in that toilet stall with the guy who was choking him. I'll never, that is like a core memory of mine as a kid. I was in pain. I was laughing so hard. Okay. You know, a potential short opportunity, even though it's at this level I'm uncomfortable being short from, but the buyers are not doing much so far, right? We caught a little up rotation off the low. If they run stops through these 20s, which they're trying to do right now, and that fails, that could be a good spot to for a little scalp short. If they turn it here without running the stop, again, there's the theme of my day today. Every position I've been in has been about either I'm the trader running stops or I'm participating after an inventory clear out from stop runs. Yeah, tough spot to be short here, though, short term. Let's see. Yeah, people who come on my desk, people who pass the tryout. I'm not looking to back YOLOers. I know that's a big thing, and you guys all have your 45 accounts across 4 different firms or whatever, but and the whole prop industry has just gone so toxic. It's just so bad. Everybody just they have this vision of just like tomorrow and the next payout. And I just don't see people with the vision of a career in trading and the things that it's going to take to build a career and to sustain. And I'm here trying to help people see the difference. Not that I'm perfect or have all the answers, or I don't mean to sound that way, but it's something I'm really passionate about as a prop desk owner. So guys, I'm looking to back are people who are serious about their craft. They're not trying to come in and make a quick payout. Even though we have daily payouts, you make the money, it's there, you can have it if you need it, right? That's how it should be. But I'm looking for people looking to build a career. I'm looking for people who are coachable. I'm looking for people who are really good risk managers, because that's first and foremost. Like Tanya was saying earlier when she came on, reminds me of a quote from one of my favorite tennis books, which I think of as a trading book almost, The Truth About Winning by Tom Veneziano. In order to become a winner, first, you must become a great loser. And that's a very, very powerful thing for traders. So be a great loser, right?
Hey, buddy.
Put in the work. The
I remember
work
when
outside of trading. Yeah, go ahead.
Yeah, no, I was just going to say, I'm coming in here. I love what you were doing today. And yeah, exactly. I remember I said that on the Chat with Traders podcast, I think in like 2016 or 2017. I never read that book, by the way, but I would love to get that from you. I just heard it for the first time. I think maybe you and I have talked about that book before, but nonetheless, I remember when I said I needed to learn how to lose first. And that was, just a big thing, because
It's
in
everything.
order to really build success, it's everything. Because that pain, it's to this day, everything that happened to me early on in my career, that pain is what motivates you even when you have success. It keeps you constantly going. It's just one of those things where I fear ever going back to the places where I was, and that keeps me from doing those things in the moment where I'm like, okay, I am not going to push this button right now, or I'm not going to do something that I know in the past has put me in a bad position. And that's only
you learn that humility, and for me and guys like us, you learn it the hard way. There's no other way to learn it.
There's no other way to learn anything in this business, right? No, everyone can tell you, but I that's why I'm so glad you're here. I think you, Pax, really everybody that we've been bringing in here is humble because you've been through it, and has the ability to work with traders in ways to really build those success stories. And I think that's just really important. So it's really exciting what we're doing here. Really great trading again today. We're not done yet. What I want to do is we're going to go right now to Jim Cagnina. And I want everyone to listen to this, and we're going to come right back with Merritt, of course, because Merritt's not done. But
I love Jim, by the way. I've only been on a call with
Jim
him one
great?
time, but I'm a fan of that man. I don't know why. I'm a big Jimmy fan.
He's such a good guy because he's positive energy. You know what? And a lot of people don't know Jimmy's background, but he's been in the industry a long time. He understands markets very well. And, he's just, I look at Jim as like somebody you can talk to about anything, whether it's markets, your personal life, macro. And, he's just got experience, and he's another guy. He's been through it. He's humble. And just a great dude, and I'm so excited to have him, be a part of this on the network. And obviously, he was on it in the past as well. But some of the things he's doing is really cool. And today, this morning he talked about Mentor Q. I don't think you talk too much about gamma levels at all, do you, Merritt? You don't really look at those much at all.
I have yet to be a believer. but I'm
Yeah.
open-minded.
And so, yeah, I know you are. This afternoon, he'll go into some stats from the initial balance and some things that we've looked at from Edgefill. And I talked about this morning. Just because people see these stats, it doesn't mean that it's necessarily an edge. If it says we're going to, after the first hour or after the first 30 minutes or something happens, it's going to be a 60% chance we close higher or lower. That's just to give you some math behind what it is that you're doing. So if you're bullish or you're bearish and you see these types of stats, I think that they're just confirmation. And they're great confirmations because math doesn't lie. They're non-biased stats, and that's what I love about what Edgefill brings. But I want to bring in, and we're going to go to Jim Cagnina now for the Edge Report, and we will be right back with Merritt.
All right, we are back. Merritt, that was awesome. We are back. Merritt, that was awesome. Appreciate some interesting things brewing here with Edgefill. I'm looking at the, what do I have up here? E-mini S&P up here right now, and I have a couple of stats which are really kind of interesting. So the first one is the gap fill stat. And remember, when we think about gap fills with the Edgefill stats, we really look at the close from yesterday to the open today, and we ignore everything in the middle. This becomes the gap, right? And I've kind of highlighted that with a rectangular shaded area on my chart. You can see we're trading way below. The white lines are the initial balance. That's the high and low of the first hour after New York's bell rings. So stat number one, gap fill at the top based on a 6-month look back, and these are probabilities by Edgefill. And yeah, there's only one L there. So if you're looking them up, remember there's only one L. 83% of the time on a Tuesday, this gap is filled. Only 17% of the time it's not. So what does that mean? It has me thinking, well, maybe there is a chance we can get a rally at some point today. The other stat, which is kind of interesting, is the initial balance breakout. Remember, the initial balance is the first hour, high to low, the way we define it. I don't know other people define initial balance differently, but this is how we define it. And again, this is based on we'll trade below and above, and there's a 10% chance we'll get no break. So single break, this is kind of important right now. We're where the rubber meets the road here. The bulls don't want us to break down below 61. They want that 80% break to be above 57.10, and that would be consistent as we drive up toward filling this gap. So it'll be an interesting day today. Now, of course, these are past performance, not indicative of future results. Anything could happen here, but this was kind of this was kind of interesting. And let me just the other market that I thought was pretty interesting, and I haven't looked at this in a second, so we'll see what I'm looking at the Russell 2000, the small cap stock index future, which I think is a terrific market. Same stats here. We have the gap highlighted, right? We have the gap highlighted. We have the gap fill. Now, this is a gap fill down. We have a year-to-date look back. 80% of the time it gets filled. 20% it doesn't. And then initial balance breakout, 70% of the time it's a single break. And only 20% of the time it's a double break. So if I'm bullish here, I'm thinking, all right, let's get that break above this the initial balance high and see if we could drive up toward filling that gap today. So that's kind of, it's a great tool. You got to kind of imagine, that's why I use the rectangles. You got to imagine where the gap is because think about it, the cash market is the cash market, and that's where these gaps are kind of generated. Futures market's 23 hours, pretty much. Gaps are rare, but the report is pretty handy here when you look at it that way. And so that's what I'm looking at today, Deli.
Thanks, Jimmy. This is why I like Jim doing these Edgefill stats. And Merritt, hopefully you had a chance to tune in and listen to that. And I think that this, as we go forward with this network and some of the great things that Jim is doing, it helps people build strategies. It helps people see things. And Merritt, as you have helped traders, how important is it to have, you and I want to make a comment before I get to this question, because I remember when you and I did a podcast years ago. Remember we talked about trading psychology, and we were talking about how important it was. Do you remember this moment? Is Merritt with me, or is
not
Merritt
yet?
gone? Oh, you're
We've had several conversations, so no, I
So-
don't remember the exact one yet. Keep
the
going.
one where remember when I go like this? Okay, yeah, got you. So, remember when I said to you, I can't remember what it was. You go, and you said to me, you go, he goes, if trading psychology was all you needed to succeed, he goes, imagine how good the Dalai Lama would be. You remember that? Do you remember that
Yeah, I
quote?
do. I do remember that. Yeah.
So that would be, so this goes back years. I mean, what Merritt and I was like, yeah, I mean, I totally agree. We're like, trading psychology comes at a later date. And so everyone goes, it's like 1% strategy, 99% psychology. And I know you and I are on the same page. We're like, well, kind of, you got to have a strategy first before psychology starts to matter. What's great about what he's doing is he's helping these traders put math into the equation to give them some edge. And how often do you find when you're bringing traders in that they really have no math and really no edge? And this is part of their biggest issue, is that it's just kind of like throwing stuff together, but not actually knowing that they have any probabilities.
Yeah, it's a big deal, and it's part of the reason why I tried to give people my best in terms of offering NADRO, offering the scalping course, offering not buy here, sell here edges, but frameworks-based edges, ways of seeing the market, ways of seeing risk reward, right? Just banging into some short here.
Oh, are you? All right, let's go back to the charts with Merritt. I don't want to distract him while he's trading. Too important.
Yeah, I can talk about it as well. Kind of got a bad feel.
I'm going to
It
let you go
dropped
back
there.
to this. You go back to focusing on trade, and I'll be back at the end of the hour.
Okay. All right, so back to the exact thought where we kind of left off before. If we ran stops into 720s and started to reverse out of there, it would be a spot where I could take a cautious short here, and that's exactly what I've done. We're having trouble getting through the point of failure. We need to drop below, I don't know, 16 and kind of stay there for this thing to work. Otherwise, I'm going to be looking to scratch out of this. Looking to take a quick scale here. Developing value low. Just a cautious scale if it starts to pause or turn here. So far, it doesn't. Just milking everything I can out of this first scale as long as it's direct momentum. There we go. So we took some off there. Market's a little agitated here, which is good for us. Do not love this trade location for short, but I love the scalp. Very different things. We can maintain contextual awareness. You can not if you're good enough at scalping, you don't have to have the context. I like to use the context in conjunction with the scalping. A couple stops to be ran right through here. Took another scale. Thinking about my risk, thinking about where I would not want to be in this trade if it popped up. I'm not going to give it to the swing high. This is as I said, aggressive type play. I don't really want to, we could do the head and shoulders thing kind of, but I really want to clamp this thing down a little bit more. I'm not putting it there because that's in front of break even. I don't care where break even is. I was more so looking at this little cluster. If you were to put a volume profile up, you'd see a little edge up at this area. I don't want to see us test that edge again. I want to see sellers dominate this thing. I'm fine if we come back in and really I want to be out above 99. That's really where I don't want to see this do much more than that. But I'm going to give it a little room. So back to what Crudele was asking me. Yeah, I mean, people like to hate on me because I have a course out there. And rightfully so, honestly. A lot of scumbags, I feel like in this industry, we all know that. Um, but look, this is what I trade, and I'm good at what I do, and I want to build a desk of people, and I want to give people that framework that they can build their edge from within these really good frameworks for higher time frame context all the way through scalping. And so yeah, look, I see it all the time. People say they have a psychology problem. People say that they have this issue or that issue with trade management or whatever. Then I'll say, okay, great. Let's get into that. Please tell me about your trade management process. Go ahead and email me that document. Let me see. Deer in the headlights, right? Goes back to one of the first things I said on this stream here today was the beginning trader versus the high level trader needs to be more process driven, more methodology, more methodical in their approach. Let's get an arrow here for the trade. Oh, thought about adding right here. Not going to do it. Thought about it. Not going to do it. I'm going to take my hands off the keys. Lately, I've been doing a lot of like momentum ads, a lot of really aggressive type of, super tight stops, little plays, little cheeky plays like that. Would have been great, but well, again, there I did it again, right? I'm kind of on the stream here, trying to keep things a little more conservative. All right, so this trade's done in terms of the rotation down. If that's all you were looking to take from it, or if that's all I was looking to take, that would be it. I'm seeing if we get a little lucky on this last little bit here. Absolutely couldn't agree with Solo more in the chat there. There is a great, so I do like to play a little bit of chess. I like to play either 1 minute or 3 minute games. Kind of like scalping. You're very fast paced, short term. Let's see. Let me look up this quote. All right. One of the greatest chess players of all time, probably the second best chess player of all time. Magnus being the best now. Tactics is knowing what to do when there's something to do. Strategy is knowing what to do when there's nothing to do. Powerful. So as we thought, the down rotation was over. It's buyer's turn to push this thing higher. So far, they're not really showing us much on the delta. So it's just a matter if we can essentially hold this imbalance down, as we would call it. Yeah, that was Gary Kasparov. Yeah, the quote. So I'm stopped at a good, I have my stop at a good spot to allow a little bit of wiggle room for that. Let's see. I say 70% chance we get taken out. Seeing some stuff in the chat. You can't see my charts. Maybe it's because I have a 32-inch monitor and your monitors are small. I don't know. I feel sorry for your little baby monitors you guys are on. Boof gets it. I should have used an Arnold Schwarzenegger voice. Adding back into this bank thing. So we're back to full size on that turn right there. Let's see if we can push these lows. Again, we drifted up higher into the exact point of imbalance, and the buying was not threatening. If you look at that delta the past few bars, it's not really going higher. So I'm going with the flow, seeing if we can push the low. I will quickly bang out of the added size if it's not working. I think I'm like a 1550 on Lichess, so not very impressive. I may not be a smart man. Where's the sellers? They dried up. That was a weird little skip. They're not going to make it easy, but I also don't need to overthink it. All right, I'm out of the added part of the position. My average fill is now showing from where the ads were. So it's, not accurate. I'm not underwater on this position. It's just a FIFO method, which I prefer LIFO. If I add to a position and then scale out, I'm scaling out of the added size, not of the original. I'm out. That just got real stally, real squirrely. Great trade. I love the aggressiveness of getting into the ads exactly where we did. Got out of the ads with essentially, did not take any loss on them. And then I like the scratch of the original position, which is from much higher on that blip. Something we could look at potentially re-entering. But again, I just don't love the location here, but the buyers just continue to, other than that blip we just saw, not really show us much. The scale of your charts on both axes is extremely important. You will see things you shouldn't, or you will not see things that you should if you get the scale wrong. I'm a big fan of fixed scales. That gives you an ongoing, through the session, day-to-day relativity in the view. What do I mean by that? That's like a very complex way of saying a simple thing. If you keep your scales fixed, you will see how big is this move, right? Let's say it's a 50-point rotation in NASDAQ. But if you just have it on in the next day, if it's a 100-point move, you see it as twice as big. Or if it's a 50-point move, you see it as the same. If you have auto scale, it's constantly changing that scale. So what's a 50-point move? What's a 100-point move? Your eyes don't get to see it quickly. I'm a big fan of fixed scales. Unless the volatility gets so crazy, you've got to adjust it to zoom it back in.
Hey, my brother, absolute clinic today. I got to tell you, I'm glad I hopped out when I did. I went back and listened to you. I can't tell you how much I appreciate your clarity and just, everything that you've done today. It's great. I mean, that's what we're here for, doing
just grinding,
exactly
baby.
What you're doing. Grinding, man. And yeah, so as we close out today's session, all I could say is just I can't wait for these. I can't wait for next Tuesday because this was so much fun and we covered a lot. I think, when we get some slower times, trading will always come first. Everyone in this network, period, the end. That's the way it is. NinjaTrader Live, if Meritt's in a trade, we're bringing, these great traders in to talk about trading. We're all about the end users and having that experience. And so that's always going to be the primary thing. So there will be some downtime and I look for those conversations between you and I because there's just a lot to discuss. Plus you and I have a lot of history. We've known each other for a while now. I love the things that you're doing. I want to talk more about that. I want to talk more about just everything, and have some laughs along the way as well because, it's not, doesn't always have to be super serious. And, you and I, we could definitely do the jabs with each other. But again, this was great. I can't thank you enough, man. Until next Tuesday, everybody, make sure you go check out Merritt on Twitter. Go to Apteros. See what he's got going on there. Like I said, he's one of the best, and that's why I'm really appreciative of his time and being here today. And like I said, it was a complete clinic, my brother. Thank you again.
It was fun. See you next week, dude.
Give Merritt the thumbs up on YouTube. He deserves it. That was absolutely awesome. Next up, we're going to be coming back with hot commodities. Hot commodities is really, really important for us at NinjaTrader Live because we've got Tracy Shuchart, Shy Girl. We've got Jim Cagnina. We've got our senior economist and our senior market strategist working together on looking at everything beyond the indexes. They'll probably cover indexes as well from time to time, but it's so important. You heard Meritt talk about this today. We've talked about this with Tanya. We've talked about this with really everybody that's been on the network so far. What's important about growth as a trader is maybe sometimes you need to get a little uncomfortable and look at some of these other products, and some of them might even be better suited for you. So hot commodities with Tracy and Jim is really, I think, the path for a lot of traders to start learning about maybe the macro behind some of these products. Jim will talk some technical. You could take a look at it, put your questions in chat. So we'll be right back with Tracy and Jim for hot commodities.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data. giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
All right, we are back for hot commodities, and what Anthony said is so true. I mean, this whole shooting match started in 1858 when corn futures popped up at the Chicago Board of Trade. 1858, I was around then, so I know, but it's been, it's a long evolution. Tracy, how are you?
Hey, Jim, good to see you again. I wanted to get just a couple news items out of the way before we begin. Trump and Putin are on the phone. They've been on the phone for nearly an hour. They're trying to hash out a Ukraine deal. So if we get some news about this in a little bit, I think traders need to be aware of that situation because it's potentially huge market moving news. And then I want to talk about, now let's lead into to commodities. What's interesting is Javier Blas posted this earlier. He's a reporter for Bloomberg. But Warren Buffett just boosted his stake in Japan's Shogu Shosa, which is by 10%, which is the world's top investor in natural resources. At the same time, he's cut his Apple stake by 70%. So Buffett seems to think commodities are where it's at.
Well, do you think
But
let me ask you a
now-
question. Oh, sorry.
Yeah.
Let me ask you a question on that. I know we got this weird delay. We'll work it out. But you think there's a relationship between the two events, right? So like Trump and Putin are, talking about Ukraine, but they're probably talking about minerals and other stuff throughout the world. And Buffett probably knows this.
Probably. I would not be surprised. He's got his eyes and ears in the White House. We know that. So could be. And since we're talking about it, let's jump right in. Let's talk about crude oil first, because we've had a lot of geopolitical risk right now with Gaza and with Yemen. Yet prices still can't really seem to get off the ground. What are you seeing here?
Yeah, no, I hear you. We're still trading below that 70 handle on WTI, which I think makes a lot of folks comfortable, except, I don't know, you'll tell me, maybe the frackers. But, today we had some really nice price action on an intraday chart. We had a lot of volume up around 68 and a quarter, and then we just kind of sold off all morning long, and we're just kind of bouncing off the daily pivot. And an important gamma level, JEX 2, it's 67.50.
And then at the same time, let's kind of related, but we'll go to nat gas because I think that's interesting. It's come off some, but we did see a spike to $4 again earlier today. So you thinking this is just a pullback to a leg higher, or what's that chart looking like to you?
Yeah, I mean, again, this is an intraday chart, Tracy, 15-minute candle, and we have a ton of resistance up here, call resistance. These are Mentor Q levels for 0 DTE options today, and we're just like stuck at 4.100 right now. I think it's going to take a lot of love to break us through. Yeah, we wick through it a couple times, but I think we're kind of seeing price happiness, especially this time of the day where you have a really dominant point of control at 4.09, 493, sorry.
Yeah, I think some of that move up was due to Gaza as well, because they are not an oil-producing region, but there is a lot of gas just off of the coast of Israel. So I think traders might be a little nervous about that as far as flows are concerned if something greater happens. And then, of course, the big news of the day.
Yeah, go ahead.
Go ahead.
No, I wanted to ask you. Sorry about that. I know. It's wonky. But so, do you think this particular market? You get President Trump, President Putin come out of their calls. They go to talk to the press. Something spectacular could happen still in this market today.
Absolutely. I mean, Russia is a very large oil and gas producer. There have been sanctions on Russian oil and gas, and so if for some reason lifting of sanctions was included in this deal, that could be a huge mover for oil and gas.
Makes sense. Thanks.
And then I think let's move to the big story of the day, gold and silver. We talked about that a little bit this morning. And yesterday we'll start with gold. Yesterday we were actually talking about that, is it going to make it over that 3,000 area and hold? And boy, have we. So do you think, gold hasn't really given us a lot of pullbacks, or very deep pullbacks, I should say. So what are you kind of seeing here? I know a lot of this is on, stock market selling off, sort of uncertainty, obviously geopolitical risks. But, how are you feeling about this chart?
Yeah, I mean, like we talked about yesterday, we broke out of this kind of 2980-ish area here where my rectangle is, if you guys could see it. And there's been no retracement since. It's just been, we had one day that was kind of a doji, a pause, but we're back off to the races again with nothing but blue sky up above. So, Peter Schiff is probably loving this chart.
Oh, yeah, his posts today are hilarious. But yes, absolutely. It's kind of one of those markets where, you're feeling like it's going parabolic, but you definitely can't find a reason to short it. So, right? So, let's move over to the silver market, because that has been lagging gold. We did talk about this yesterday. Looks like 35 is still sticky for this market. Do we get above this? What is the chart telling us?
Yeah, I mean, we wicked right up to it, that 35.000. It's right where significant call resistance is, and I'm still becoming a fan of put call levels and gamma levels, but I'm getting there quick. And when I see a wick that just tags it and just turns all the way around, I like, it's like, aha, look at that. So So today, I think, right now we're still within the initial balance range right now, but it looks like we're trending down a tad bit. But I don't know that we're going to go all the way down to the OTD, zero DTA level, 34.35 today.
Yeah, that seems like a kind of a big move. And we talked about silver this morning and some of the movements behind it as far as the fundamentals were concerned. We have traders wrong-footed. We have tariffs possibly going into effect from Canada and the U.S. and Mexico on April 2nd. U.S. gets 70% of their silver from Canada and Mexico, 20% from Canada alone. And so if tariffs are enacted and there are reciprocal tariffs, 25% on silver from Canada to the U.S., that could cause a rather large move. And so we'll see as it gets closer how traders are feeling about that.
Yeah, so let me ask you a follow-up question here. You mentioned tariffs. Secretary Bresser was on TV. I don't know where he was speaking this morning. He was speaking somewhere, but he made the following three quotes. I'm just going to read the quotes. For some countries, the April 2nd tariff may be low. Reciprocal tariffs won't be automatic 25% plus 25%. And then he says, the president asked me to rethink U.S. sanctions regime. It just seems like news on this trade front just changes all the time. The messaging is confusing.
Oh, absolutely. I totally agree. It is very confusing, and it's something different every day. There are different numbers thrown out every day. And so I think that's, a concern for traders because, we don't know how to react to this because you never know what's going to happen. So I guess we just need to hang in there until April 2nd. Unless we get some actual clarity before then.
Yeah, no.
Let's move on to our last market, copper.
Dr. Copper, give me a second here to toggle over there. All right.
So we had a big move to the upside to $5. Again, that $5 level seems to be a sticky level overall for copper. The fundamentals, again, look great on this. What are you seeing in the charts?
I mean, it's kind of looking like gold, kind of, right? I mean, we had this double top that was breached, and we just kept going, and there's nothing but blue sky up here. I had to resort to some fib extensions, which, I think they're okay, but they're not the greatest method of coming up with targets. But, we have a 123% target up here, a 138%. Until there's some kind of retracement, again, I'm going to be looking for places to buy.
Yeah, absolutely. And I think a lot of this news coming out of China is sort of helping that as well, because it looks like they're going to provide the stimulus they need to start buying commodities. They came out the other day and even said they're planning on buying a lot of commodities for their stockpiles. So,
yeah, and this has been like predicted
that.
we've been hearing this for so long, and is it finally becoming a reality where everyone's like, all right, we're going to get on this copper thing?
Well, I think it's finally becoming a reality. So
yeah.
We'll see how this plays out. All right.
All right, awesome. Tracy, thanks for being with me. We're going to take a really quick break and get into some midday updates. Be right back. Oh, no break. All right, thanks. Thanks for no break, guys. Oh, my goodness. By the way, in the chat, there was a mention of another charting platform, which is fine. But I want to tell you guys, based on, I'm using the NinjaTrader desktop charts right now. And until I joined NinjaTrader about 4 years ago, I didn't use them. I used other some of the charts you're referring to in the chat. But I'm old enough to have used them all, right? I've used, everything from Sierra to CQG to E signal to um, uh, you name it back in the day, right? And then even before that, a pencil with a piece of paper. But these are, and I know you're going to say, well, Jim, you're biased because you work here, you represent NinjaTrader, but I wouldn't say you guys in this chat know me well enough. At least a lot of you folks know that, it's like what my mother told me, if you can't say anything nice, don't say anything at all. So I wouldn't say anything, but the chart, these are the best charts there are. I mean, they're fantastic charts. They're so feature rich. Plus, you add on all the ecosystem plugins. This is my gratuitous NinjaTrader chart promo of the morning. So in, in any event, let's take a look. Let's go back. We talked about some of these stats about opening range and initial breakout. No special guest today, by the way. We'll have a special guest tomorrow in this segment. We're going to have Fabio from a Mentor Q. You're going to love him. We're going to introduce the Q score too. I haven't talked about the Q score yet. It's super cool. But let's just kind of take a peek back and see what's going on here with the E-mini S&P. Now, we have our single break. Remember, single break was like 83% chance that we're going to have a single break of the opening range. And we just had that on the E-mini S&P, but to the downside, right? It wasn't, I'm looking at the June contract. Yeah, it wasn't to the upside. I'm going to go ahead and add the watermark really quickly so I don't outthink myself. So hang tight, guys. Let me pull it up. If I could remember what it's called, because it's not called watermark. It might be called symbol watermark. Yep, there it is. Double click on that guy. I'm going to add it. We'll make it white so we can see it a little bit better. Whoops, it's too big though. It's too big though. Way too big though. Let's make it, I don't know, let's make it 70, and we'll bump up that opacity up to 80 so everybody could see it. Apologize, not set up ahead of time. There we go. E-mini S&P June contract. So the interesting thing is, we wicked through, right? We wicked through the bottom of the initial balance here. We don't have a candle close below it yet. And that's going to be like really important to me, right? Because, a lot of times we have wild wicks and we have wild news and we have a lot of volatility in these markets. So when I look at a market like this, it's right at my area of interest. Again, this lower opening range low is an area of interest for me. I'm tracking the first hour of trading, of regular trading hours in the equity world. And so, yeah, we wick through it, but we don't have a body close yet, right? And then when we think about it in conjunction with, well, are we going to fill that overnight gap? And let me just show you that really, if I still have it up. Yeah, that overnight gap. We have a long way to go. We have miles to go, right? But we have an 83% chance of filling it. Just from the casual observer, I'm going to say there's no way we're filling this gap. But the stats are telling me, well, be a little bit more open-minded, Jim. Be a little bit open-minded. So in any event, though, this is looking pretty negative right now. On the downside, there's, I don't know, previous sessions lows, I think, is the next target, right? And that's around 5650, just north of 5650 for the E-mini S&P. What color are my bars? Hopefully you'll see it. You guys could see this. These are just red and green, traditional red and green bars. Guys, I'm just kind of peeking at the chat there. Let's shoot over though to the Russell. The Russell 2000, we talked about this earlier today as well. And I want to go back to those stats that we were talking about. And this one's looking like a little bit more optimistic, right? It's just from a casual glance point of view, right? We didn't close below the opening range low. We have buyers coming in. We have these 1, 2, 3, 4 big heavy wicks at the bottom. When I look at these wicks at the bottom, it's telling me every time price dips below 2064, we have buyers coming in. And it's pretty evident to me that this is an area of interest for me. So now the question though it remains is this gap fill going to be filled? And remember, the gap fill is from the close the close, regular trading hour close. And I hate to say regular trading hour close. It's like, uh, in future trading, there is no irregular trading hours, right? You get the irregular trading hours in the equity world. But in the futures world, it's there's 1 hour where the CME closes glowbacks and they dust off the chips or whatever they do, restart the servers, and then we get going again. So there's not a lot of gaps there. So this represents kind of the cash gap. So right now looks more realistic to me. So why is this important? So if I decided I'm bearish at this point in the stock equity markets, which which I got a whole bunch to choose from. I have the S&P, I have the Russell, I have the Nasdaq, I have the Dow. I could do mid caps, I could do the DAX, I could do the Eurostock 50. So I have a lot to choose from. So but I'm looking at the percentages, the odds, and I'm looking at where buyers are coming in. And so this would be my best bet. Now, I'm not saying this is going to rally, and I'm not saying I'm interested in getting long here, but I'm just saying the pattern has been pretty consistent. The point of control here, this is a volume point of control, that orange histogram bar. This is just tracking volume that's traded at every given price point throughout the day. And, it just creates these histogram bars. They never get smaller. They always get bigger if we're trading at that price. And it provides a nice distribution of what I would call, and I learned this from Dan Gramza, by the way, price happiness, right? The biggest histogram bar is called the point of control, right? That's the price where buyers and sellers agreed to do a deal the most times, the most volume anyway, throughout the day. And so that's why I like to call it price happiness. There's value on both sides there, and it's kind of acts like a magnet sometimes, right? Now, this is not a normal distribution. This is not a bell-shaped normal Gaussian distribution. This is skewed way down, and we have a couple volume nodes a little bit higher up, if you could see it through the gray spot. So this is kind of this whole, I don't know, one standard deviation worth of volume here. That's that dark green. This is my radar screen right now. This is where I'm looking for. So if I was to become bullish, I would say something like this. Listen, the next time we get another wick down below this 2064, I would like to see us try to drive toward the bottom of the value area before I get involved, before I get busy with this. I want to get that way I have a better place to put my stop, better stop management. Alternatively, if I decided I wanted to go short, then I would look at the top of the value area, and I'd look at that pivot, that daily pivot, and say, okay, that's a nice area of interest right there. 2072. Maybe if price drives up here again, then I would like to get short with the stop into that value area. And that's kind of the way I would look at it. It's not a really quick in and out trade, but it's it's more of a position or swing trade, I guess. Not a position trade, but really just a swing trade. Oh boy. All right, let's keep rolling here. Let's go to some other markets here that are on the move today, because there's a lot. We talked about the Euro FX, by the way, and we'll keep that on our radar screen. This is a really good market. The currency pairs are all really good on the future side. There's so many advantages of trading the currency pairs on the future side. I was in the Forex business also in the mid-aughts. I guess they call them the aughts, 00s. And it was big business, right? It was over-the-counter Forex. Everyone talked about pips instead of ticks. But in reality, you're trading against a dealer. It's not a regulated exchange. It's not transparent. It's not, you don't see the order book 10 ticks deep, 20 ticks deep, right? You have a dealer in the middle, grabs prices from EBS or some other source, some other bank feed, and then marks it up a little bit, tweaks the bid-ask spread, and then here's what you get. You could trade two different Forex over-the-counter markets and have different bid-ask spreads. Not in futures. It's all the same. That's only one of the benefits, by the way. In any event, so this is, again, it's an interest rate sensitive kind of thing. What's the spread between the interest rates with respect to the ECB and FOMC, and some other things as well. So it's a really good market to trade. And right now, again, really nice point of control here. We're kind of just trading right below it. We've traded through this point of control. And here's another thing that's kind of important. Another thing that's kind of important to me anyway. When I look at a point in control that's dominant like this, This thing is dominant, right? It's the biggest histogram. That white histogram bar is the biggest one. Let me open it up a little bit more. And you can see it's bigger than anything else. And then it just kind of go across. One, two, almost three, four, five, six, seven, 8 out of 8 bars traded through that price. It's acting like a magnet. There's no trades right now. Of course, president goes, does a press conference, things could move. Christy Lagarde does a press conference, things could move. So keep that in mind as well. And you can also get some big wicks here. Like, look at this wick at the top, this wick at the bottom, pretty big.
Mamma mia, that's a spicy meatball.
It is a spicy meatball. So anyway, I just wanted to show you that, and then just kind of looking at oopsie, that's a Swissy. Just looking at this chart here. This kind of is my proxy for the U.S. dollar. Right? It's kind of like the dollar index, although the dollar index throws in Mr. Yen in their calculation, along with some others. But it's a really not, dollar's way off. The Euro FX is way up. And this is a double top. We breached a double top today. I think I want to see another confirmation candle that closes above my rectangle there before I'm ready to say, all right, it's time to go to the next level on the Euro FX. So if you're going to Europe this year, wait for a pullback before you exchange your dollars at the bank. You'll get a haircut anyway. Anyway, so that's a good market to look at. Let's keep moving here, though. Tracy mentioned gold. Let's kind of do a deeper dive into gold and look at some levels here. And usually, gold and the U.S. dollar, the textbook anyway says they're inversely related, but they're not always really highly inversely related, right? And the train of thought is, well, the U.S. dollar is cheaper, so foreign entities now are going to come in and buy gold because it's cheaper, or vice versa. But I think that's a bigger picture idea. On an intraday chart, anything goes, right? This whole correlation could be a little bit different. So, just kind of looking at this right now, and I love these Mentor Q levels. They work on most of the futures markets, and they have a thing called 1-day max, right? And the calculation, it's again, 1-day max doesn't mean the price can't go any further, right? Clearly it could. We went further, but the 1-day max is kind of adds an area of interest to the chart. So that's why I kind of keep it in there. And then the JAX 1 level here, that's the hot gamma, the heavy gamma levels, they call it, right? And the one is the biggest, the most important one, and then you go 2, 3, 4, 5, 6. And on Mentor Q, you could literally, I think I had up to 10 of them to see where there's clusters of options activity are, and it gives us kind of again, another area of interest to consider, right? We have a bunch we have fibs up here. We have previous sessions, open, high, low closes. We have pivots on the chart, and then the volume profile. I don't have a lot of like moving averages or Bollinger Bands and that kind of stuff. And Deli's like a expert on that kind of stuff. I kind of keep those off. Now, I would add a VWAP, though. I would add a VWAP, and I'll show you how to do that in a second. We'll go back. There's two different ways to do a volume-weighted average price. You could do it. You could anchor it anywhere you want. And well, I'll show you here. Why not? We could show you on gold. I'm just going to right-click here on my chart, and I'm going to go down to Drawing Tool. And this whole menu appears to the right. There's a whole bunch of stuff on here. And I'm going to go all the way down to where it says Order Flow VWAP, Volume Weighted Average Price. This is the anchor, right? I'm going to click on that. And let's just say I wanted to look at it from the opening range forward. And I click, and it gives me that VWAP line. And we'll do this in the E-mini S&P. It'll make a little bit more sense, I think. And this shows you where the anchored VWAP is. And I could anchor it anywhere. I could anchor it to the London session. I could anchor it to the open, right? To the very open last night at 6 o'clock. And it's another kind of indicator that folks use. And the way they use it is, and now I'm regretting putting that symbol up there, but I should make it a different color at least. The way they use it is, hey, so a couple things to think of. It's a line like all the other lines on the chart. It's a lot of traders use it as a change in momentum, a change in direction, right? So or support and resistance, right? Here it acted as resistance, 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 and then here we broke through. So now we have a change in direction. We have a confirmation candle, right? That's brewing right now. This confirmation candle is not done yet, but once it's over, if it's a green candle, I'm going to call it a confirmation candle, meaning momentum has changed in the gold market. So that's kind of one way to use it. You could also add standard deviation bands around the VWAP, which I like to do on occasion, but it's kind of clutters everything up during these streams, and I get a lot of complaints. So we're not going to do that today. In any event, overall though, when I'm looking at gold, and I'll have the RSI at the bottom, and I won't explain this every single day what I use, but for the first couple times I will. And just as basic RSI, 14 period, no frills. I don't make any changes or modifications to it. Added it to panel 2 of the chart, and then that kind of completes the story for me. So this is kind of my setup. This is how I look at things right now. So a couple things to consider here for the rest of the day, and I'm going to use rectangles as well. For those of you who have been with me before on NinjaTrader Live 1.0, I like to use rectangles. And so what I do with these rectangles, there's just a visual crutch for me. It's just a visual, really a tool, right? So I kind of place, so at the top, where you have all these wicks up here, I add the rectangle, so at the bottom of the rectangle touches the highest body of a candle. Forget about the wicks, but the highest body of a candle. And then I'll extend the rectangle up. Sometimes I don't go all the way up to that top wick. This is part of where the art is instead of science. But the science is, boom, the bottom of the rectangle on the upside touches the highest body of a candle, which is this red candle right here. And I'm going to say out loud, this is resistance, right? This is resistance. Resistance is not, in my mind, is not a line. It's not a number. Remember, there's so much volatility in these markets, and they move around a lot. You could see it by opening up a trading ladder. That by the time sellers come in, or sellers are maybe more patient, which they should be, then you could kind of wick up into that area and still get short and have a good short. The same thing on the lower side. So same thing on the lower side. So I'm just going to go back to my drawing tool. I'm going to select rectangle, and I'm going to go back and find an area at the bottom here, and kind of see where my support is, right? And this is all intraday, 15-minute candle. I know people are used to me doing a 10-minute candle, but I've graduated to a 15-minute candle, and you can see again the top of the rectangle is touching roughly so the lowest body of a candle, right? So it's the opposite of the top, and it's touching the lowest. And so now I can see where buyers are coming in, buyers are coming in, buyers are coming in, buyers are coming in. So now I've defined my range for this afternoon. We could have a breakout, right? Up or down for sure. But or we could have a trend day. I don't see a trend day here in gold right now. And so now I could kind of use, areas of interest like 1-day max, 23.6 and 38.1% retracements. R3 is areas where I might consider to enter and areas where I might consider to exit. So that's kind of how I look at this particular market. We're kind of tight. The bottom of this range is 30.32. The top is 30.44. So it's about a $12 range, right? It's pretty big. It's a nice tradable range right now, and we're kind of in the middle of it right now. One last thing I did want to show. We talked about anchored VWAP. I'm just going to, I'm going to delete it real fast. And I'm going to add an anchored volume profile. An anchored volume profile. Right click, indicators. Sales asking if Merritt's coming back. Now you guys suffered through me, Sal, till 12 o'clock. Oops, I did that wrong. Sorry. Right click, drawing tools, and I'm going to go to down here. It says order flow. It's right below order flow VWAP, but order flow volume profile. I'm going to click on it. Now my mouse is activated, right? My mouse is activated. And let's just say I want to look at this consolidation rate, this this range that I just highlighted with the rectangles, and I want to see what the volume profile looks like in that range. And so now I have just forget about the data before the 7:30 to 7:45 candle. I'm just tracking data after that, and it gives me again a really nice volume profile with a volume cluster up here, another volume cluster, So those in among themselves are targets, right? Is an example. If I'm bullish here, I would look at my profit target potential, and that would be R3 right at the apex or the peak of this volume cluster up here. A lot of folks thought there was value up here at 3043 spot two. Why can't there be value there? Well, there could be. So it's another kind of really handy tool that I use a lot. I'm teasing. You'll get to know my personality. I have thick skin. I'm old. I've been around a long time. So, but I appreciate you guys coming. Appreciate everybody being part of this. This has been fantastic. Anthony has been, he's like, I don't know. Hopefully he's not listening. He's like a genius. He'll probably use it against me, but he kind of understands trader education and community development, right? This is about community. It's hard to kind of trade by yourself because a lot of it's patience and waiting and waiting. And it's boring. It's the best, boringest job in the world. It really is. And so to be part of a community, to be able to talk to folks and interact, maybe get some questions in and hear from folks like Merritt, Shy Girl, Anthony, it's fantastic. I'm excited to be here. Let's go over to the micro NASDAQ right now. Again, trading in the June. We're not trading in the March anymore. If you're using the mobile app, I did a tweet. They don't call them tweets anymore. I did an X showing how to roll over a quote on your quote board on the NinjaTrader mobile app. It's a spectacular app. And again, I've used them all. And there's not that many really futures trading apps that are that good, but if I've used them, this one is good. It's really well thought out. The production folks really did a great job with it. If you get a chance, download it, play around with it. It's pretty handy. We have a bunch of how-to videos as well. So micro NASDAQ, June 2025. Kaz, thanks. Kaz, it's great seeing you, man. I really appreciate it. I missed being away for a few months, so I'm glad you're here. Appreciate you. Steve R says I could say tweet. So micro NASDAQ again, we had this big benchmark candle here, and this is another kind of terminology that I'm going to use from time to time is called benchmark candle. And it's in this case it's obvious, right? It's the biggest candle of the day, and it's the biggest candle of the day by a lot. Not by if there's no second place, there's no contenders here. This is the winner chicken dinner, and this was the 9:30 to 9:45 bar, and so benchmark candles often set the pace for the rest of the day. Now, not always, but often they set the pace for the rest of the day. And you could have a benchmark candle during the European Open, the London Open, which I have in those purple lines right there. Although I got to double check my purple lines because the we track the London Open, and I think the Brits have something called. This is great. They have something called like a summertime. I can't remember. Shoot, what is it? It's not daylight savings time. It's like summer fun time or something super cool. I can't remember exactly what they call it. But they're not going to move their clocks until I believe it's March 30th, right? So there's a few weeks there where we move our clocks back in the U.S. They don't, and so sometimes it throws off my chart calculations. Anyway, all right, let's keep rolling. Again, opening range. I'm sorry, the initial balance, first hour. Again, no candle is closed below it. Right now, I'm not super bullish here, but to be honest with you, this is looking pretty negative right now. I don't even have cumulative delta up. That's another thing I could add that Deli's really good at interpreting. But I'm right now. We'll see if this holds. Right, we have a high volume 0 DTE support line right here, approximately 19,650. That's that blue line going across. Again, that's a Menthor Q line that I got from them. And so that's going to kind of act as support. And let's kind of drill it down here a little bit. And this could be a case where if the dam breaks, the dam breaks. And any unplanned news is going to be a factor here today. Tracy mentioned that President Trump and Putin are talking on the, I don't know, do they do Zoom meetings, you think? Do you think they do a Zoom meeting, or do you think they have like some other kind of video technology? I don't know. You would think like two presidents are going to be, they're not going to be using Zoom. Could you hear the conversation? They're going to be talking about some seriously important stuff, demilitarizing the world, and they're going to be like, hang on a sec, my Zoom froze. I don't think so. I think they got a better deal. Anyway, again, rectangle time. Wicks, we wicked into it once, twice, tapped it 3 times, 4 times. This is support until it's not. Now, the one thing that I noticed down here is S2. This is based on the daily pivots. Remember, we have, the pivot point, S1, S2, and these are all calculations based on the previous day's ranges, so they vary. But once the previous day is over, then this calculation pops out. And so it's a target for me, right? So it's a target 2 different ways, right? It's a target 2 different ways. So if I want to get short right now, then I would probably want to try to place a profit target just a little bit above that S2 level, right? Because my thought process would be, well, if we could, we're chipping away at the floor, we're chipping away. One of these times it's going to break, right? And when it does, we should probably see some momentum on the downside, and I want to be prepared for that. So that's why I'll put my crosshairs approximately there. I don't like being right at the area of interest for a trade like this because first of all, there's a lot of points between where we're at and where I'd hope we go. The other, but also I hate missing like my profit target by a tick. It just makes me mad. I don't want to be mad. I want to be happy. So that's now. Alternatively, if I wanted to go long, let's say I was doing a position trade or a swing trade, and I wanted to get long here, then I'd position my stop down here. Right? It would be a big risk reward trade, but that's what I'm thinking. Maelo, Michael, good to see you, my friend. I missed you too. I'm glad you're back. Good to see you. Hopefully you like the new format. Yeah, send us any comments you have. Feel free. I'll give you an email. You could do that too. You could, the email you could use for that is learn@ninjatrader.com. Learn@ninjatrader.com. Shoot us an email. I don't know. You could say anything. Jim, your watermark sucks. Take it off. Whatever you want. And then we got a whole team of folks that are going to look at that. Any kind of feedback's positive. This is day 2, by the way. It's shocking because this thing is going off like day 1 we had a couple small, tiny hiccups. Day 2, I don't think we had any. And it's amazing the amount of moving parts on this thing is great. I mean, Meritt's in one location, I'm in another location. Deli's got the studio down in Naples. There's cameras all over the place. Tanya's down there right now, broadcasting. So there's a lot of moving stuff. So so far so good. Sal, I did not take. Right now I'm like not taking any trades. I'm like focusing on presentation and show flow and all that stuff. All right, so let's toggle back over to, again, we're going to toggle back over the E-mini S&P, take a peek, and then we'll do the Russell, and then go to some commodities here. We have some time left. So we have our first break, right? We have a close below the initial balance low, right? Candles closed, body of a candle. That's what I look for, body of a candle. And we have previous sessions lows though. That's that dotted line I have there, that red dotted line. That's previous sessions lows. Didn't quite get there yet. And I say yet because, again, this is not looking bearish. This is looking bullish. And I'm going to open this up a little bit more and kind of look at some of the. I'm taking this off, Kevin. You know what I'm going to do? This watermark's driving me insane. Let's water down the watermark. How about that? How about that? We'll water down the watermark. We'll put it at 20. Let's see what that looks like. All right, much better. We just watered down the watermark. So I'm looking at the S1. That's a pivot, really important. A lot of traders use it. We're below the 1 day min. We're below Jack's 4. We're below the bottom of the value area. That's that dotted white line right here. The trend is down. Yeah, we have one, like, this is a rebel candle right here, right? We got one rebel candle. The last 50-minute candle tried to become a bullish engulfing. Didn't quite make it, missed it by a tick or so, but and we had a nice wick up to the pivot, by the way, right? This is a good example of wicking to an area of interest and then coming right back down. So again, because of this formation, this 1, 2, 3, 4, 5, 6 candle pattern right here, this has bearish written all over it. So again, target next area of interest. You could use whatever your area of interest is. You could use gamma levels. You could use previous sessions lows, and that's what I would do. I mean, this would be my signal here. 56, 60, 2.5, something like that. For a move to the downside here, and then I'd make this trade proportionate, right? I'd make the trade proportionate because I would want to be I want to be stopped out if we start trading above S1. Now we haven't traded above S1 for, I don't know, almost 45 minutes, so that's another thing to think about. How long have we not traded at an important level, and why haven't we? Right? Okay, a couple reasons why. Well, it's lunch hour now; everyone's eating lunch. Okay, still though. Not everybody. And the algos aren't eating lunch. Algos are just running. You just got to feed them electricity. Oh boy. In any event. So again, looking pretty bearish. But always have your stops in, because any given second you could have breaking news that wasn't planned. It's called unplanned news. There's only a small amount of things you could do to protect yourself. As an example, we don't know what I don't know. I haven't looked at my financial juice news feed since I started talking, but we don't know what. Let me see if I can find it. Uh, yeah. So here we go. I'm just gonna show this real fast. Financial juice. This is a free kind of thing. It's streaming. It's real time. It's pretty good. And so I kind of glance at this throughout the day to kind of see what's planned news. What was the 52-week bill auction like? And now, I see White House. The Trump and Putin call is still ongoing, right? So we know that there's going to be a press conference after it's over, right? There's no question, I don't think, in anyone's mind that there's going to be a press conference. But the unplanned part is what's going to, a deal has been struck, or no deal has been struck, right? We don't know the answer, right? And that's unplanned. So that's one of the many reasons why you must have a stop loss. And it's best practices. Best practices. I mean, even if you're not going to put a profit target in, which I think is best practices also, stops are best practices. And then again, you could also use the ATM, right? The automatic trade strategies with the NinjaTrader software. And you could create simple brackets, multi-target brackets that are automated, and you put your hands in your pocket and take the motion out of it. Let it go. All right, let's keep moving. I'm sorry, I missed that. What's that blue line? Which chart was I on? If you see the blue line again, ask me again. I'll tell you. Let's go to the 10-year note. This is my second favorite market all time. So the 10-year note reacts really well to the options levels, the high vol levels, the gamma levels. I mean, look at this high vol level up here. Pretty much that has held as resistance, not only after the bell, but pre-market. Yeah, we ticked above it a little bit. I don't know, around midnight. Probably 3 people trading it then, and now boom, not 3. This is a thick marketplace. So these levels are kind of important. So I have this market's kind of flanked between the high vol levels, right? High vol and then the zero DT high vol. And you don't really need to know that much about overarching option strategies. I don't. Iron condors, you don't need to really know that. What you need to know is where these areas of interest are that tend to gravitate price, right? Tends to gravitate support and resistance levels. And we just keep bouncing off that 110.24. Now, there's a smaller range on the 10-year notes than there are on the 30-year Treasury bonds, which is another one, which is my favorite market, by the way. That's the market I grew up in. And it's a bigger market, though. It's a $32 tick. So it's not for the faint of heart at all. But this market kind of gives me a good guide of what the pulse of the market is. It's a smart marketplace, right? It kind of, in the futures world, this market kind of anticipates it's an interest rate driven market. It's a supply and demand driven market. It's funding the federal treasury market, and it tends to kind of react sometimes days ahead of news, and sometimes days ahead of FOMC. And so what we're seeing here in the 10-year notes is we have a really nice base here, a really nice area of support, approximately, I'm just going to eyeball it at 110 and 19 halves, right? And that's also traded in 30 seconds, by the way. A handle is $1,000. So we're sitting up against that right now. We just keep buyers just keep pushing us back up, nudging us back up in this market. But the other thing I'm noticing, and I'm going to bring out my inner Tom Schneider right now. I'm gonna draw a trend line, and I'm gonna touch the tops. Right, there's a top, almost touch it. There's a top. You can see a series of lower highs. Right, this is forming a descending triangle as measured by the wick, right? And the base is right here where my crosshairs is. And, forget about what the textbook says on descending or ascending triangles. But a breakout could be inevitable, right? And it's funny, we're coming up against an FOMC presser tomorrow, and we're getting close to the tip of the descending triangle. Just kind of a basic chart pattern. Yeah, we can go sideways still, for sure. That's why I'm going to keep the rectangles up there. But also keep in mind, if we break out, it's going to be one of these kind of factors that are like, all right, this may be a little bit more meaningful of a breakout because of the pattern's been breached, and other traders are seeing this pattern and they're reacting to patterns, right? I react to patterns all the time. So I imagine a lot of other folks are as well. Oh boy. So great question. So Todd, I don't know who your question was to, but if it's to me, I'm going to answer it. It doesn't matter who it is. I'm going to answer it. Better starting with micros, with a smaller amount of capital than full minis. Hallelujah to that. The micro contracts are fantastic. They're just great places to spend your time. And it gives you the ability, it really does. It gives you the ability to kind of to learn and get your muscle memory going, right? So let me just pull up. This is the classic E-mini S&P, right? And so each point is worth $50, right? Each point is worth $50. In the micros, each point's worth $5, right? So it gives you the ability, and no matter how much you fund your account with, it should always be risk capital, right? It shouldn't be anything other than risk capital. But it gives you the ability to kind of practice with real money, trade with real money, get your muscle memory going with real money, get your style going. Everybody has a different style, and get, your system. Everyone has a different system. Most people do, and kind of get that down, get that 10,000 hours down. Maybe it doesn't have to be 10,000 hours, but get that in the bank with the micros. And I know it could be frustrating. Every day when you look at your statement and you're like, oh, I made $2.50 today. But I promise once you get there, then you can start building, you can start doing bigger positions. Now maybe I'm going to do 2 micros at a time, right? So I can do 2 micros at a time, or 20% of an E-mini S&P. Maybe I'll go 4 micros then. I'm going to go up to 40% of an E-mini S&P. And even on 1 micro, there's usually a lot of meat on the bone. There's usually a lot of meat on the bone if you're patient. So anyway, that's my philosophy on that. I don't know for what it's worth. Oh boy. All right, let's keep rolling here. We're covering a lot of ground. We're doing good today. Um, let's go back to oh, by the way, I have my death cross up here. I forgot to mention that. It's the E-mini S&P death cross, right? It's where the 50 simple moving average crosses under the 200 moving average. We still have about 65, no, 165 points before they converge, right? So hopefully they won't, right? Hopefully they won't. But that's a warning sign. That's like DEF CON 5 right there if that happens. So just wanted to point why that's there. I don't put the 50 SMA and the 200 SMA on every single chart, but actually this is kind of linked to my market analyzer. So you will see it on every chart. But to me, in my mind, it's important for the stock index futures. Oh boy. All right, let's keep rolling here. I do want to take a look at crude oil one more time because Tracy mentioned it. And if it's important to her, it's important to me. So, wow, look at that. The sell-off continues, man. The sell-off continues. And I don't know if this is anticipation of positive news coming out of the phone call, right? Hey, you know what? All these sanctions are going to be lifted. Oil's going to flow. We're going to have even more supply now. And it could be anticipatory of that. We have a double bottom. This is kind of a classic double bottom. And this is a good example of no regular trading hour, all regular trading hours in futures, right? Where were we at last night? This is a global marketplace. This is not, WTI crude. Yeah, it's a benchmark. It's a benchmark launched in crude, but it's a global market, and it's inexorably enwound with Brent, Dubai crude, energy substitutes, supply and demand. There's a lot of moving parts when you're trading crude, right? That's why it's best to kind of follow Tracy on X because she's really good at knowing what those moving parts are and how they all interact. But anyway, we have a double bottom here. And we're still moving. Previous sessions lows, next target around 67 even. We have S1 down here is the next target. And don't say it can't get there. Could get there, right? Definitely could. It might not, but it could. We have the major gamma levels. They're in the rearview mirror. 68 was Jax 1. 6750 is Jax 2. And a lot of times in the futures market, you're going to see these at even numbers, these gamma numbers. And that's exactly what we're seeing right here. All right. Well, we covered a lot of ground today, folks. Appreciate everyone's patience. I appreciate everyone being here with us. It's spectacular to be back in the seat with the crew we got. It's a fantastic crew. So having said all that, we'll be back at 2:30. Find us on YouTube. We'll be back at 2:30. We'll do another Edge report in anticipation of the Power Hour. And then we're going to have the Order Flow Labs guys back trading in the close live. And it'll be a couple other guys. Leo and Nick. It's not going to be Leo and Nick. I think it's a couple other guys. I'm not quite sure. But again, 2:30 to 4, we're back on. So hopefully we'll see you then. In the meantime, remember, most important message of the day, folks, please be safe out there and be good to each other.